All right, welcome to the second day of the Select Committee on Blockchain, Financial Technology, Digital Innovation Technology. We had a good long day and a lot of good discussions yesterday on some incredible topics. Specifically, I think the end of the day with the cryptocurrency mining was amazing. And we've got another robust agenda today, looking at some updates on insurance, DAOs, Chancery Court, digital identity, and NFTs. And then we'll all be able to get out and start enjoying more of the hackathon and Stampede activities. Before we get started, let's start with roll if we can for today.
Senator Murphy.
Here.
Senator Cost.
Here.
Senator Nethercott. Here. Representative Stitt.
Here.
Representative Western.
Here.
Representative Yin.
Here.
Here. Mr. Rebel.
Here.
Chairman Rothfuss.
Here.
And Co-Chairman Olson.
Here. Thanks. All right. Before we get started, are there any updates? Any updates on the hackathon Stampede? Anything that we need to go over this long for today? No? Okay. Still going on. Everyone enjoy it. More to come. And Mr. Co-Chairman, announcements before we get started?
I don't think so. Just definitely get out and enjoy the conference while it's here.
All right.
Lots of exciting things happening all week.
Excellent. And I'm going to remind everyone, so University of Wyoming is currently requiring masks indoors when social distancing is not possible. So if you have one, please wear it. I'll have some students actually theoretically this afternoon coming in and prefer at that point in particular if everyone would be masked. They're supposed to be masked in classrooms to protect them. So if we can get that done, that would be cool. Committee, anything before we get started on our first topic for today? Get the Department of Insurance updates. Seeing no announcements, let's do that. Come on up. Let's get the Insurance Commissioner, Deputy Commissioner, and Mr. Brooks up to give us a little bit of an update on where we are. For those that weren't following previously, this is, I think, our third update on discussion about insurance and reinsurance that we've had. We've got some ongoing work to identify solutions for an insurance sandbox, as well as kind of look at our regulatory and statutory structure related to insurance and reinsurance and find ways that we can start bringing blockchain solutions to the insurance and reinsurance market. So with that, welcome. Please introduce yourselves to the committee, and the floor is yours, Commissioner Root.
Thank you, Chairman Rothfuss. Committee members, I'm Jeff Root, the Insurance Commissioner. With me is Ms. Johnson, the deputy. Also with us is Mr. Raymond Brooks from Azure Reinsurance, who's the creator of the project Gannett that you'll be hearing about. Since the last meeting, we've continued to work and we've made progress with Mr. Brooks. I'm optimistic about the future of the project. We've worked on some changes that we think will be needed to tweak our investment statutes. We've actually sat down with Mr. Brooks and all of our domestic carriers and reviewed those same changes. And they are all on board. And I'll certainly let Mr. Brooks go through where we are specifically with Project Gannett. I did have one question out of the chute, though, if the committee would indulge me. With Project Gannett going forward, we'd like to do those changes to the investment statutes. So the question we had is, will they be brought to this committee or will they be brought to corporations? Because it's, to be honest, I don't think it's an innovation per se. I think the insurance sandbox is unquestionably one that should come here. This, though, I just didn't want to be the children in a divorce and to see if we were going to. So I will leave that with you to ruminate and let us know at some point in the near future, please.
And Commissioner, we'll discuss that internally. We have members of the Corporations Committee as our intermediary that can help to bring that family back together. I do think in all likelihood, if it's relatively simple, it would be handy to bring it to the next select committee meeting, have us review it, discuss it, And then what we would do, I think, is we could sponsor it, but we want to bring it over to the corporations committee for their consideration, probably at their final meeting. We could sponsor it, but we definitely want to provide that update to them so they know what's going on, and we've got the internal coordination. Mr. Chairman?
Yeah, Mr. Co-Chairman, I would agree. Corporations has a little project there right now. It keeps them.
Great, yeah, something, they've
Is
got
anything
something
we
going
can
on.
do to do some legwork in advance for them?
Yeah. Go ahead.
The corporations committee is having separate meetings for redistricting, and we still have our normal course of legislative work. Sure, so both committees are appropriate for it to be held on, but I think it started here in transition years. It's pretty.
Somebody go.
Mr. Chairman, that'd be great. Thank you. I will turn it over now if we can hear from Mr. Brooks.
Excellent. Mr. Brooks, welcome.
Thank you. Since our May 27th meeting, the Insurance Commission and myself have been working on looking at the existing Title 26 investment guidelines and thinking about if and how those investment guidelines need to be modified to best facilitate long duration reinsurance in the state of Wyoming. And what that means is Title 26 has a section called Section 7 investments. And that was probably last updated maybe 20 years ago. And so a lot of the types of investments that insurance companies are using today aren't necessarily contemplated. And so what we're doing is we're working with the peer group of the other domestics and making sure we collect all domestics needs into one proposal for you that would allow for a reinsurance company or insurance company to domicile in Wyoming to properly match its assets and liabilities to achieve solvency and maintain appropriate credit for the benefit of the policyholder.
Mr. Brooks, we have a lot of folks, I think, that are watching online and that are here today perhaps for the first time hearing about this project. Can you give a 2-minute overview of kind of what we're talking about and how we got here?
Sure.
Thank you.
Just about exactly a year ago, I met with Dr. Edward Seidel, who was collecting ideas for the Wyoming Innovation Network. And my idea was very simple. I had just come out of the Bermuda insurance industry and felt that possibly, just possibly, Wyoming might be a good economic jurisdiction for reinsurance. And so we being the Insurance Commission and myself have spent, started working together in January, running a variety of iterations in an economic model, trying to understand how reinsurance would fit into the existing insurance code and what possible modifications to the insurance code might be required to optimize or enable the optimization of running reinsurance. Now, there's lots and lots of different flavors of reinsurance. We're not trying to take on Bermuda. We're trying to pick one flavor of reinsurance and see if it works here in Wyoming. And the flavor of reinsurance we're starting with is something called long duration reinsurance. So what is that? That's annuities. It's certain forms of life. It's certain forms of savings, wealth, very long insurance policies that would be aggregated and reinsured in the state. Yeah.
Absolutely. Thank you, Mr. Brooks. And one of the discussions we had was really the anachronistic tendencies of some of our statutes for not really recognizing the differences between the reinsurance sector needs and the consumer insurance sector needs, and really trying to look back at the statutes to create a structure where reinsurance is treated and managed and regulated to optimize for those needs. Is that a fair assessment?
That's a fair assessment. And I think let's dig into that real quick, just for the record. When we think about primary insurance, sort of insurance that we buy as consumers. The regulation is under the NAIC appropriately protects the policyholder, you, me, right, the consumer. In the case of reinsurance, we're more worried about solvency. Is the reinsurer able to maintain solvency over the life of the policy to protect, in this case, the new policyholder becomes the original insurer.
Maybe before we go on, any questions, feel free to jump in if you have any questions. I think everyone here probably remembers this review. Any questions, please? My apologies, Clark, Representative
No,
Fitz?
I don't want to interrupt the presentation.
Okay, yeah, and I think my presentation is we are very much work in process. And we're working in a great collaborative fashion. We have some ideas as to what the modifications to Title 26 need to be. We're working with others throughout the country to find model law that maybe there's precedent out there, maybe there's best practices. We're working with various investment managers who are focused on the insurance space to think about best practices. And I'm highly confident that we'll be able to talk about that in November in the Cheyenne here. I think right now we just feel like we're very much in that iterative process of figuring out what the solution is.
Commissioner Bruce, slightly different topic. I wanted to ask if you believe that Wyoming could benefit from having a captive insurance company statute, and in certain states have that. Wyoming right now does not.
Mr. Chairman, Representative Stiff, I've talked with a couple of neighboring states, Montana. We can look at that. It is a large undertaking as a department. It would be a significant increase necessary to do it, but it's something we could look into. I didn't, when I first got the figures for what it brought into the state of Montana, I wasn't overwhelmed. I wouldn't say, gee, this is really a money getter we got to go after. But, happy to look into it.
Thank you, follow.
Mr. Chairman, in particular, what I see for, say, construction companies, for example, that have government contracts, they're required to get a performance bond, surety bond for the project, and typically the cost of that bond is about 2%, maybe a bit less. And so over the course of years, the contractor ends up, you have 25 projects. At the time you pay 2%, you now pay 50% of an entire project. And what you get for that as the contractor, frankly, isn't great, right? Because the bond company, unless you disappear or go bankrupt, the bond company doesn't do anything, essentially, right? Even if it's a troubled project, if the owner calls up the bond company, makes a claim on the bond company's response is to send a letter to the contractor saying, hey, you fix this, right? So from the contractor's point of view, they're giving away 2% every time, essentially. And it'd be nice, perhaps, for the medium-sized or larger Wyoming contractor to be able to say, hey, we're going to set aside some money and create our own captive insurance company, insure ourselves. So that's a potential application that I don't know if it would generate a lot of revenue for the state, but could be good for our local contractors. So they're, instead of sending money to the big insurance companies in wherever they are, not here, that to keep some of that money here local. Wouldn't you agree?
I'll make a couple inquiries. I'll just get a little information. I'll share it with you and whoever else wants to. Just do a broad view of that to see if it's something for.
That would be great. And Representative Stiff, you may be following, and you may not, the work that's going on in the Minerals Committee with regard to providing a performance bond that is internal, where you can create an account with the Treasury, fund that account, and then have that be your bond, effectively your surety. And we're working on trying to make sure that would survive bankruptcy in the isolated states. There's a lot of nuances to it, but it gets to the same concept of instead of paying someone else to provide the surety for you, if you have sufficient capital, you can build that capital up over time, provide your own surety and provide protections for that. So we're working on a mechanism, if you haven't followed it, and I think there's some synergies there where there might be other applications for similar to that. Representative West.
Thank you, Mr. Chairman. That was actually exactly how I was thinking about as well. That's why that's an excellent point. Yeah, no, I think there's a lot of potential there, especially to see great benefit to the state for persons being bonded, insurance companies, et cetera. But my question is for Mr. Brooks. Calendar when it comes to retaining information. So I'll ask you the question I asked May. And obviously, Bermuda has got that market corner for the reinsurance, like Long Direction or some of the other ones. What specifically, what's the value add that Wyoming has that could really potentially garner a lot of attention and business in this specific space? What can you bring to the table? Attract market participants.
Mr. Brooks, go ahead.
Yeah, thank you, Mr. Chairman. Representative Western, I think the framework that we're thinking about when we think about Wyoming is Wyoming has a few economic benefits that include the fact that we don't have a corporate tax policy. Well, we do, but it doesn't tax, which isn't analogous to Bermuda. But also, Wyoming has the benefit of not historically not having a lot of legacy insurance regulation on the books. So because of that, we've got, let's call it a clean slate. And that gives us a lot more flexibility when looking at comparable states. There are states out there that have done a great job in these life and annuity products. And we can look at those states and somewhat easily come to you and propose that we borrow best practices, common model law, and also maybe take a step forward and find new ways or better ways to host these insurance companies that some of these other states just can't do because there's so much legacy regulation on the books.
Chairman, so if I understand this correctly, you don't feel like going into Hartford, Connecticut, where they have got reams and reams of insurance regulation on the books. So you got fiddle with those statutes, you've said a bunch of other people. You come to Wyoming, it's a pretty petri dish, for lack of a better phrase.
Yeah.
We can make some magic.
Yeah, and I think that's a great comparison. Connecticut, I can't imagine having this conversation with the legislature instead of like a 5-year window. If we could have the conversation. Any further follow-up?
All right, Mr. Bell.
Thank you, Mr. Chairman. Mr. Brooks, following on Representative Western's question, if the legislation were enacted as you envision it, what would Bermuda have that we wouldn't?
Go ahead, Mr. Brooks.
Thank you, Mr. Chairman. I think what Bermuda has that we wouldn't is Bermuda is operating under something called the economic balance sheet capital regime. And also Solvency II equivalent, so that they're thinking about regulation under a solvency framework, whereas we will continue to be operating under the NAIC's risk-based capital framework. Now, that's not to say one's good or bad, because I think what we're going to find out when we get into, say, November and December is there's certain duration of liabilities and assets that are going to perform exceptionally well under the NAIC risk-based capital. What we have to do is, between now and then, do that analysis, compare and contrast, and focus on where we're going to outperform.
Go ahead, Paul.
That being the case, what do you think the appetite is for the existing reinsurers to onshore their businesses?
Thank you. I think that the existing applicant is limited, but we have a couple trends that are taking place. Most Bermuda reinsurers today are now opting to be onshore taxpayers. So the historical benefit of not paying or not being subjected to US federal taxes while they're making profits offshore has diminished, right? They're voluntarily electing to be an onshore taxpayer. So I think what it will be those offshore players who have decided that they want an onshore jurisdiction and they're not already domiciled in, say, Iowa, or it's somebody who is looking for the right framework. And there will be those out there, for sure.
Oh, go ahead.
Thank you, Mr. Chairman. Is there the potential for a more robust de novo reinsurance sort of creation if this framework is in place onshore?
Go ahead.
Chairman. When I think about de novo, I think about startup. Is that?
Yes.
Yeah. The conversation that Insurance Commissioner Rood, Deputy Insurance Commissioner Johnson and I are having envisions pretty high capitalization standards. So when we think about startups, we're thinking about a startup that is really well capitalized with long-term capital. So it would be in that context. Yeah, it wouldn't be, when I think about de novo, you know, sometimes people are trying to do it on a shoestring. In our conversations, we want a pretty high standard.
Thank you, Mr. Chairman.
One follow-up that I have based on our discussion is the concept of solvency-based that you mentioned for Bermuda versus the NAIC recognized risk-based capitalization. What are the comparative advantages to the two forms? I'll just stop there and then follow up with that. So go ahead.
Mr. Chairman, I think historically, the advantages of being in Bermuda were that there was a wider array of investments allowed, and the capital charges, because we're focused just on reinsurance, we weren't focused on primary insurance, the capital charges for both the investments and holding the regulatory capital on the balance sheet were more efficient. What does that mean? They were less. So for your earnings, you had a higher ROE because you were just holding less capital. I think that in the circumstances that we're talking about today, I think that we're going to find that there's, as I'm repeating myself now, there's certain segments that the NAIC is going to be just absolutely competitive, and we're going to find that being onshore produces satisfactory return.
So the next question I have, this select committee and the task force before were big on heresy and just doing things their own way. What's required, or what would happen if you had a reinsurance sector in Wyoming that you carved out that was not NAIC compliant? You basically said, we're going to do reinsurance separately from other insurance, and we're not going to adhere to NAIC. And yeah, I love the look on Commissioner Johnson over there who now wants to leave the room. Yeah, perfect. This is exactly where we want to be.
Mr. Chairman, I'll answer for fear of others answering. Ms. Johnson is our former chief financial analyst. We would lose accreditation, which would mean that no other insurance company that wanted to work in other states would ever come to Wyoming. No domestic here may not want to stay here if they were going in, if they were also selling products in another state, because our work could not be trusted by the other states. So if we have a domestic here that say sells a product in say Colorado and Montana and Idaho, those three states could not rely upon our work in the exam. They would actually have to do their own. And that is very burdensome. I mean, these exams are very intense. So that's the benefit of accreditation. we can trust everybody else because we have the same standards and we adhere. If we lose that, no one is going to domesticate here and try to sell elsewhere because they could be like, well,
More specifically, though, Commissioner, I don't mean abandoned make for the entire state. I mean if you created, not changing anything, but creating a new phenomena of a reinsurance that is not NAIC compliant, but adheres to a Bermuda style standard. And just basically say, this is not NAIC accredited. All of this is NAIC compliant. We're continuing as normal. We're carving out this alternative approach that is not big flag, wave the flag. This is not NAIC compliant. Everything else is business as usual. Is that going to threaten compliance with everything else with NAIC? Does NAIC hate that?
no, Mr. Chairman, it's you have accreditation or you don't. You have it in all areas or you don't. There's no mix and match. And so if we carve it out in an area, we would lose all accreditation across the board.
Mr. Chairman, Linda Johnson, Deputy Commissioner. So
A little louder, and I'll note, I didn't mention this morning, so we have a microphone system that's an overhead microphone system and it tracks to voices. That's a warning for those folks that are in the audience that you too may end up on the audio for the streaming live to the rest of the country and the world if your conversation rises to that level. So be thoughtful about that and keep those really special conversations maybe out there where the microphones won't be tracking you. And with that, back to you.
Thank you, Mr. Chairman. So the way accreditation works, it for multi-state companies, that's what accreditation is for. For single state companies, accreditation wouldn't care. So like our Blue Cross Blue Shield and Delta Dental, they only do business in Wyoming and they only affect Wyoming people. So accreditation, when they come out and review us, they don't look at our financial oversight of those two companies. But like reinsurers, they're taking policyholders from all over the country. So what we do with those reinsurers will affect policyholders in other states. So that's where accreditation would be concerned, what we're doing with our reinsurers.
Okay.
So if that makes sense.
And I realize that you both viscerally find this horrifying, but I'm still exploring it just a little bit. We had the same immediate reaction with our speedy banks, which were one of the most successful things this select committee task force did. And that was FDIC insurance, where no bank would ever consider having a bank without FDIC insurance. That would be ridiculous. And then it turns out that was not true, and it was heavily embraced. And we found some ways to work within the system, right? We didn't wreck anything for any of our existing bank charters. They're all fine. But we created a new form of charter, and we made it very clear, again, waving a giant flag. This is not FDIC insured. It is a special purpose depository institution with these conditions and these allowances and these different regulatory structures that they adhere to. And so by creating that bright line and that effectively statutory firewall, we have two options. And that's what I'm exploring here. It sounds like NAICS is a little less tolerant for that, but I will ask you, and again, I don't think you're enthused about it, but I will ask you to explore that a little bit and see if anyone's ever done anything like that as we move forward, maybe have a conversation. I'll ask the question again in November. And if it really does obviously threaten our entire accreditation for insurance, then that's not something that we're going to want to do. But if we have more options than we're aware of, I think that would be beneficial. And I appreciate that information. And I'm going to go to Mr. Brooks and see if you have any thoughts or comments on it. And I'm going to go to Representative Cyrus.
Thank you, Mr. Chairman. My visceral reaction is identical to the.
You're also horrified.
Perfect. I can't imagine being an operator in a non-accredited jurisdiction.
Okay. Excellent. All right. Representative Western.
Thank you, Mr. Chairman. Mr. Brooks, but I thought after Terrell's question, one of the great things that you does retain is that economic balance sheet. What was it called again? Yeah. So isn't that kind of what we're trying to recreate in a sense? And my question would be, what if channel my former colleague who was the chair of this excellent committee, who's good at wild ideas. What if we created another Department of Insurance that only does reinsurance? So your accreditation isn't, keep yours, they have their own. Scale 1 to 10, how crazy?
What's the pay structure of the commissioner's position in that in your theoretical?
He doesn't want the job, anyway.
Mr. Me, I don't think it's severable. I just don't think you can sever this.
Okay.
I just don't see it.
No, I appreciate that. Thank you very much. Yeah, scale of 1 to 10. Did you want the number?
Sounds like a 10,
Okay.
perhaps even a 12.
Could be a 12. All right. Thank you. And please continue. Appreciate that. I think we had another question. Representative Weston, did you have a different question? Because
Well, I guess my follow-up would be,
Yeah, go ahead.
Mr. Chairman, then how can we create either aggregate or some other way the benefits that these economic balance sheet brings to the table?
Mr. Brooks, thoughts?
Mr. Chairman, Representative Western, I think our vision, to answer your question, I think our vision is to modify the investment guidelines to allow for, to enable insurance to optimize the balance sheet, optimize solvency, okay? Match assets and liabilities, so the assets and liabilities are cash flow matched. And do that inside the NAIC framework. Okay, so we're not trying to pick up Bermuda and bring it here. We're trying to say, okay, what do they do a really good job of? What can we do a really good job of? What do we need to do to modify Title 26 to do that good job? And let's focus on what we can do in the NAIC framework.
Oh,
I'll ask how far.
okay. Somebody is counting on top? Go ahead. Senator Perkins.
About asset quality. I noticed you're using risk-based capital. Mostly focused on duration of the assets. How would you provide a list of acceptable long-term assets that could be invested in? What I'm getting at is, of course, there's high-risk mortgage-backed securities, et cetera. Would you come up with a sort of a list of what would be acceptable investments beyond the duration?
Mr. Chairman, Senator, I think the way we would do it is the Title 26 would codify what is allowed. And then we would ask, and in the way Title 26 would codify that, we'd talk about, and I am looking to the commissioners, NAIC qualifications, credit ratings, jurisdictional standards, i.e. The jurisdiction of the issuer of the credit. The NAIC has various schedules that the investments are listed in. We would codify as to how much each insurer can hold in the various schedules. You talked about mortgages. Mortgages are on a specific schedule. Title 26 already contemplates that. So we would stay probably within those confines. And then finally, in our conversation, the thing we're asking is each reinsurer would present to the insurance commission its investment guidelines that would be approved by the insurance commission. And then the reinsurer would have to stay within those investment guidelines and show compliance on an annual report.
Follow up, Senator? Committee? Anyone else? All right, anything else to add? Anything else?
I don't think so.
Go ahead.
Mr. Chairman, I don't know if you wanted just to roll into the sandbox legislation, if we're done with the project and net updates, or how would you want to proceed?
I think we'll have staff walk through the legislation, even though we went through it, so a high level walkthrough. And Ms. Nord has a memo also, and maybe we can have Ms. Nord come up and very briefly go over the memo. It's very straightforward though, so I don't think that'll take much time. And then we'll come back up and have a comment on the draft. That would be okay. Thank you. Appreciate it. All right, happens in, Ms. Nord, you want to come up and on? Committee, we asked Ms. Nord to put together a brief little research memo, just kind of some highlights of the insurance industry, get some numbers for us, and we've got that in our committee material that's posted online. And Ms. Nord, if you want to just briefly walk through, it's pretty straightforward, but hit a couple of highlights before we go to the legislation.
Absolutely, Mr. Chairman. Clarissa Nord, I'm an associate research analyst with LSO.
And Ms. Nord, a little louder, please.
Yeah, absolutely. So this memo, as Mr. Chairman mentioned, was prepared in response to the committee's request at your May meeting. It's very brief. I apologize that it wasn't one page as y'all requested, but it just really provides some introductory information about the reinsurance industry. It briefly reviews the size of the U.S. reinsurance market, and then it just briefly summarizes some of the recent trends within the industry as well. So the first portion of the memo here just goes into a definition of reinsurance, and then it goes through a couple of different forms of reinsurance. So happy to answer any questions there on the first part. I will go into the different forms of reinsurance. So generally speaking, there are two forms of reinsurance, so both treaty and facultative. So for treaty agreements, these typically involve a long-term arrangement of coverage, and they cover kind of a broad range of policies, both life and non-life policies, where facultative agreements are a bit more rare. They occur when a reinsurer accepts a specific individual or high value risk in a one-time transaction. So generally speaking, treaty agreements occur more often than facultative just because they have fewer formalities and they're easier to administer. So then going into the US reinsurance market, it's important to note that I wasn't able to find one single standardized source of data regarding the size of the US reinsurance market. However, annually, the Reinsurance Association of America reports the underwriting results of the country's major property casualty reinsurers. So in 2019, the property casualty reinsurance market in the US consisted of 25 US-based reinsurers with net premiums written of $61.8 billion. And one thing I found interesting was that the top 5 US reinsurers accounted for more than 70% of those net premiums, so roughly $43.6 billion. And then something else that might be of interest to the committee, some of the largest US reinsurance companies are affiliated with foreign reinsurance groups. So I have a couple examples for you there on the top of page 3. And then just very briefly here, getting into some of the recent trends and innovations within the industry. So for some trends, of course, in 2020, like most major industries, the reinsurance industry did experience some disruptions in profitability due to COVID. And then they also experienced some increased natural catastrophe claims as well. So I have some figures there for you in terms of those losses. And then moving forward, experts do predict for 2021 that the industry will rebound, provided that they anticipate some more COVID-related losses and then also increased natural catastrophe claims as well. So, and then in terms of some recent innovations and kind of how it coordinates with blockchain, some reinsurers and insurers are working to integrate blockchain technologies with their processes. So I've provided a fairly recent example for you there on the kind of in the middle of page 3. So I'd encourage you to look at that. So that was a very, very brief overview of this memo, and I'm happy to answer any questions y'all have.
Thank you, Ms. Nord. Any questions for Ms. Nord? Just did. Go ahead.
Mr. Chairman, Clarissa, thank you so much for the memo. With respect to the blockchain innovation, is there any indication that there's any changes needed to any statutory framework to help them do that, or is everything just fine the way it is, and it's just a matter of taking blockchain technology and applying it because they want to?
Mr. Chairman, Representative Smith, in my research, I didn't find anything where any statutory changes would be made. I think it's just an innovation within the industry and just one way to increase their efficiencies and effectiveness. This particular example just allows reinsurers and insurers to work together on one platform, which is great. So the contract process is far more streamlined, which is
And we can certainly ask our experts that same question to see if there are any concerns, but it was something that came up early on with the idea of using blockchain to expedite and facilitate transactions in Wyoming through the work that we're doing. So hopefully we can do that. And I do believe the sandbox at a minimum would contemplate the legislation to take care of it. There were further questions? Let's get to 22 LSO 64 version 3, the insurance sandbox. I think it's very much the same as we saw last time, but you could give us a highlight walkthrough and anything that is different. Thank you, Mr. Chairman.
David Hopkins, from the Legislative Service Office, reviewing 22 LSO 64 working draft version 3. This version is substantially the same as what the committee did see back in May. There have been a few clarifying changes, but nothing frankly worth mentioning or spelling out. On a high level, what this bill does is would allow the insurance commissioner and an individual or company wanting to participate in an insurance sandbox to do so. It would allow the commissioner to waive a significant number of requirements in Title 26, essentially currently just about all of them. It does limit that the commissioner is not able to waive any requirement that would jeopardize NAIC accreditation. And frankly, that's about the only limit within the bill draft as far as what rule or regulation could be waived, potentially waived by the commission. I say about the only regulation. There is a requirement that the product be an innovative product. In other words, something that's new and it's something that is restricted by a current statute or regulation that would need to be waived. And the person applying has to spell out exactly what that is. The sandbox period would run initially for 24 months with the possibility of an extension for another year. There are requirements that they are still subject to potentially to liability and things of that nature. They have to post a bond, the amount of which is determined by the risk assessment or the risk level to the consumer and can be modified or changed as needed by the commissioner during the course of the sandbox. Again, sandbox, background check, and there are limitations on criminal history and things of that nature that would just potentially disqualify them. One thing the committee may wish to consider as well, and I think was brought up a little bit at the last meeting, are the timelines we're looking at here. It does have some limitations, 90-day limitations, 45-day limitations on timeframes for applications to be responded to and approved, and that's may not be within this context something that the department could accomplish, but I would certainly defer to them on that question. And then this act would be effective January 1st, 2023. You should begin to consider the appropriateness of that effective date. With that high-level overview, Mr. Chairman, I don't know if that's sufficient or if you'd like me to go into any more specifics, I'd be happy to do so or answer any questions.
I believe that's good, Mr. Hopkins. Any questions? Hopefully we'll all remember most of this. Go ahead.
Mr. Chairman, can't help myself. Mr. Hopkinson, to make this concrete, can you give us maybe an example of what one of these innovative products might be that's not currently available? When I try to think about this, I think of maybe an auto insurance policy that protects you against the risk, say, of being struck by an autonomous self-driving vehicle only, right? That's all the policy covers. I mean, something whacked out like that, or is there some more concrete real-world example that this might be applied to?
Mr. Hopkins, go ahead.
Thank you, Mr. Chairman. Frankly, Representative Stift, I'm not sure on that because I'm not familiar with the NAIC accreditation requirements and what could or couldn't be waived under that limitation. So I really can't provide a specific example, but perhaps the Department of Insurance can.
Thank you, Mr. Hopkinson. And we can ask that of the Department of Insurance. And honestly, we were anticipating the proposed reinsurance concept needing a sandbox. It just doesn't look like it's necessarily going to need a sandbox. So at this point in time, I don't know that we're certain of that. So I think that's part of the impetus, is trying to get to the point where we're not prohibiting innovation because of what are effectively antiquated statutory constructs that aren't necessarily the spirit of what we need to do, but just provide for that negative consequence. Any further questions? Go ahead, Ms. Long.
Mr. Chairman, just a comment. It seems like we keep running into this, right? We're doing all this innovation to try to reflect the fact that this technology doesn't fit in any natural boxes, but we keep running into these national standards. We've seen it, the question came up yesterday with ABA routing numbers. Can we create our own? And the answer is no, if you want to plug into the legacy system, but not all the speedy banks will want to do that. So Godspeed, go do your own thing. But the nice thing about the law is that it created the flexibility to do that. We ran into it with the Uniform Law Commission, right? We're running into it with NAIC standards. We keep running into the fact that this stuff is just not, it just doesn't fit. It's not backwards compatible. So I think just as a general comment, what we achieved with the speedy charter, it was flexibility. It gives the users the choice whether to plug into the traditional system or not. And I like where you're going with the whole question of, okay, we can't put our NAIC accreditation at risk, but what can we do outside of that that preserves the flexibility? I don't have an answer, but it's just an observation. We are pushing the envelope and we should. Thank you.
Yep, thank you, Ms. Long. Anyone else? Go ahead, Senator Murphy.
Thank you, Mr. Chairman. Let me say, first of all, I like this bill, but let me ask, if a consumer invests in some of these innovative products and they lose money, you feel the state's obligated to reimburse the consumer?
Mr. Hopkins.
Thank you, Mr. Chairman. Senator Murphy, that could be very fact specific, but generally speaking, I don't think this would change what exists. It does have some specific liability waivers that the state is not obligated or isn't providing any affirmative representation that this is something that a person is safe investing in or anything like that. And so there are some, I believe, some language in this bill draft that kind of cover that and inform the consumer that the state of Wyoming is not backing up this product.
Go ahead, Paul, Senator. And I was just looking for the language. We mirrored this off of the sandbox bill for financial technologies, and we had pretty extensive requirements for communications, warnings, and then bonding, insurance, and consumer protection in place. And I know some of that is on page 13, but I was looking for, there's a consumer protection bond on 15 and on to 16. risk discussion on 17. So again, there are an awful lot of additional provisions that would go along with any product here that don't have to go along with a traditional product. So it's layered on top of any of the other requirements to make sure that anybody that was investing in it would know that this is sandboxed and might not be your best choice of product for that reason. Additional questions?
Johnson. What was the rationale for the
Thank you, Mr. Chairman, Representative Western. That did come from the financial sandbox, and so that's mirrored just language from there. I would assume the reasoning there is they didn't want anybody, particularly there are prohibitions if they have fraud type convictions, things of that nature. So just trying to keep that sort of thing to a minimum.
And Representative, that was exactly where it came from, was that discussion of ensuring that there weren't unpaid fraudulent actors. There was specific interest in that by the Division of Banking. I think I'll provide that assurance and ask the Commissioner for comment. Going so long. All right, seeing none, Commissioner, come on up.
Mr. Chairman, committee members, I guess start with the last question concerning the background checks. That's something we do regardless of what was done on the financial section. We do that anyway. If an agent, for example, or a board member or something has a conviction, we have to look at it, they have to give us the facts, and then we can we can waive that. But we do that traditionally with all of the industry.
Thank you.
Committee, if you recall, my original concern when we met last time was with accreditation standards, not wanting, and we didn't want necessarily to list them in the bill just because then everybody would think that they're available for waiver, because they will not be. I will not grant any of them a waiver on an accreditation standard. So,
yeah, go ahead, Representative.
Thank you, Mr. Chairman. Sure. I'm sure you get a lot of applications. How many of them come back with background history, fingerprinting or other?
Mr. Chairman, Representative Western, if we're talking, depends upon the group we're talking about, with agents and people within agencies, actually quite a few. But some of those are a felony DUI that's 30 years old. We get notified of it, we get background information, we approve them. Others, though, are identity theft 3 years ago, and we go ahead. I also did, I think you did an excellent job. They also listed those standards on that we don't, the accreditation standards that we don't, would rather have not listed on page 12, lines 35 through 42. And Ms. Johnson, you can go over those if you all would like. And the other concern I had in our previous meeting dealt with our lack of expertise in the office and within the department and how to fund what we're going to do. Since we last met, I've talked with the departments of insurance in the states that all have insurance sandboxes. I've talked with Vermont, Utah, Washington, Kentucky. I've talked with some others that have more along the financial lines, because some insurance departments actually oversee the financial sectors also. We do not, thankfully. What I have found from all the people I've talked with, there has not been a novel or innovative approach that has been approved. There have been some inquiries asking for waivers of standards they can comply with, which would be convenient or more profitable to the entity, but would not be prohibited because of the innovative nature of the product they're coming up with. And so much of my fears have been allayed in the sense that, I mean, I was concerned with what if we got hit with 6 applications right away? I cannot process them in 90 days. I think those fears have gone away a little bit. I still think, though, I need I still need money in the bank with the ability to have experts on retainer if that ever should happen though. And that's something that I would ask this committee, if we go forward with the bill, that I would ask for $250,000 of assessment authority put in my budget. Now, the money actually comes from just increased assessments across all lines of insurance, and that's how we're funded. And I could put out requests for proposals, get the bids, have some companies on innovative products standing by if their expertise is needed. If it wasn't, the money would sit there. And after a number of years, if I didn't need it, I would just assess that money less in my next budget. With that, I know there are a couple other questions that, and I probably forgotten them, so I'm happy to answer them.
Any questions there? Go ahead.
Mr. Chairman, I know when we talked about blockchain and if the industry can use blockchain without changing our statutes, and that's possible right now. I know 2 large insurance companies, they were trading 75,000 subrogation checks a year, paper checks going back and forth between the 2 companies, and they implemented a blockchain project where now those payments go electronically between those 2 companies without the paper checks. And that saves them 75,000 paper checks a year. So, and that can be done right now without any changes to our insurance code.
So on that point, that's good to hear. When they're doing that, what are they transacting in and you recognize it? So are they using a stable coin cryptocurrency transacting back and forth and you allow that and consider that to be a legitimate asset? Because I guess that's kind of the concern is once it leaves dollar and you're auditing their assets and their risk profile, are you comfortable with that, or is there any statutory barrier to them effectively converting from dollar to a cryptocurrency, maybe a stable coin, and doing the transactions in that space?
Mr. Chairman, I'm not knowledgeable about the specifics of it. They're 2 national companies, so they're not domesticated
Okay.
in Wyoming, so I'm not sure how it all works. I didn't, in the article that I read and in the presentation, I didn't hear anything about Bitcoin or cryptocurrency. So I'm not sure if they're still, I think, doing it in dollars is what I assumed, that the transactions were going between the companies in dollars, but I'm not sure.
Okay, thank you. Go ahead, Mr. Pop. Oh, sorry, Commissioner.
No, there was just 2 minor things I was going to point out to the committee if concerning the bill, if it should go forward. Page 15 is the application fee of $50. I think we'd want to increase that to $5,000. If they can't afford $5,000, they don't need to be in this space asking for an innovation. Personally, that's my point on that. And on page 16, we have 90 days to complete upon receiving the application. I would ask that be modified to receiving a completed application. As Ms. Johnson will attest to, even with the best of the best companies, it's a back and forth when you do an application as to what they did and did not put in that application.
Understood, thank you. Mr. Kaufman, you had a question.
Thank you, Mr. Chairman. Commissioner, I have a couple sort of zoom out questions. I remember your testimony from last time, and if I mischaracterize it, correct me, but it was sort of along the lines of, I'm not really sure how somebody would use this legislation as you sit here today. Has you thought about that changed, or do you still feel the same way?
Commissioner, go ahead.
Mr. Chairman, Mr. Kaufman, I don't know of any innovations. And we talk about this all the time. I meet with the commissioners of all the other states 5 times a year. This is what we talk. We talk about this quite frequently. So as soon as one of these comes up and they're like, hey, we think this might work, I'll gladly let everyone know. I just haven't seen it yet. I think it can be, I think some innovation though, and with blockchain though, to me, title insurance should be blockchain. Why isn't it? Why, I took to a firm where I went back to a grantor grantee index, 2 books, and opened them up and wrote stuff down. This should have been done. This should have been one of the initial applications of blockchain. Simplify.
Go ahead.
Sure, along those lines, I'm just curious, when you've spoken to the other states, if there's been any conversation. So one of the projects that I'm aware of I know we went off the deep end here. I'm not suggesting that we should dive into this, but is DeFi, decentralized finance protocols, where people can group, pool essentially insurance, right? It's essentially private insurance pools that people can use smart contract protocols where you might pay in with a particular digital asset, submit your claim through the smart contract protocol. This is becoming really, really interesting in the DeFi space. And I'm just curious, in your investigations with the states, is anyone looking at this?
Go ahead,
With respect to a potential use case for something like this?
Mr. Cuppin, I've not come across that topic and discussed it.
Okay. And so, Mr. Chairman, my follow-up was gonna be whether or not you could envision something like that fitting within this bill. Because I only asked that question because I think that is a potential use case for something like this. But if we don't think that this bill accomplishes that or could potentially allow us to explore that, then maybe we need to look at some amendments.
No, Mr. Chairman, Mr. Cuppin, that's where I think I need those experts on speed dial and have the funds available to bring them in. I have my element with that program, but I would like to find people who are independent and who I can call up and say, hey, please review this proposal. Let us know what you think.
Representative Stitt.
Mr. Chairman, don't want to belabor it too much, but if we pass this, Mr. Commissioner, could a Tontine life insurance lottery be authorized by the Wyoming Department of Insurance?
Finally. Reading of this day. Go ahead.
Mr. Chairman, I went back and I actually watched the old MASH episode where Colonel Potter talked with the Tontine with his buddies from World War I and how he's the last survivor and they're drinking the last bottle of brandy.
So you did your homework.
I'm trainable. I can't be dumber than some of the other ideas I haven't heard of. We'll look at whatever comes our way.
Thank you. Do you have any follow-up? Have you seen the MASH episode? All right, well, we'll all do our homework. It's long.
Mr. Chairman, that's not as crazy a question as it might sound because early in my career, I worked on the demutualizations of all the big life insurance companies. And the challenge with those mutual life insurance companies is that they can easily turn into tontines. Yeah, and frankly, what is a blockchain? It's a way of mutualizing risk. So what's old is new again. It's not as crazy a question as you might think.
Further questions on that topic? All right, please.
We're here to answer questions. That's all we have.
One other point that was raised last time, and we left the language as it originally began, but we have a reference to it in the staff note on page 12, lines 40 through 42, which is that as written, there's language that would allow an unlicensed or entity pending licensure to participate, and I think there was a desire to not allow an application by an unlicensed entity. Any further thoughts on that? We kind of left that for a later conversation. We went back and forth trying to decide whether we needed that or not, so please.
Chairman, yes, we need these entities to be licensed because again, that is an accreditation requirement that we do require insurance companies to be licensed. So we can't have any kind of demer or any that type of language. So yeah, there are, as he pointed out in the staff, several areas where we want to ensure that the companies are licensed.
Okay. The concern that we talked about was the idea that they might be applying under a circumstance where they're not yet licensed because they want to do something innovative. And that's the reason why they're applying into the sandbox, is to figure out, can we do this ahead of their licensure? So it almost seems like we might want a different trigger than you can't apply until you have licensure. I think it's very reasonable to say, we will not approve you until you have licensure. But I don't see why they can't come, apply, have the conversation, go through the process, and then have you say no prior to a licensure. Does that make sense? And I've been thinking about that sense, trying to figure out how we could achieve both objectives. Is there a concern about that?
Mr. Chairman, I think that's workable.
Okay,
right? Because the accreditation standards, it wouldn't be affected because when they're licensed until they were usually licensed.
right,
So we could certainly do that.
okay,
And I'll point out, I mean, when someone first applies, when a company first comes in, we have dozens of conversations with them all the time on how to keep that. They actually put something to paper and give us an actual product, because we try to head off all of as much as we can ahead of time.
okay, yeah, and that's I think what would be beneficial to industry, to be able to come in and explore without having to, all right, well, step one, let's go through the entire licensing process. Then we come in the door and say, we've got this great idea, and you say, yeah, we can. That sounds like the wrong order of operations, but it sounds like you're comfortable then if we just make sure that you can't approve until they're licensed, but they can apply. All right, excellent. Questions on that topic? Go ahead. Anything else, Rick?
Thank you, Mr. Chairman. I actually was going to go back to Mr. Kaufman's comment earlier. He's just stepped out of the room, but I think we could go ahead anyway. I think his comment was a good one, which is that it's quite likely that someone who might be taking advantage of this sandbox will be doing so for a decentralized finance application, which would, I think, mean that there most likely there is not an intermediary or a company that would be regulating or applying. It would be a protocol or software source code that would need to be regulated. And does this contemplate that? Does this permit that as drafted? Question.
That's a great question. The idea that now we just had our licensure discussion also. So I've got a piece of code that is going to act effectively as an insurance entity instead of an organization. Any thoughts on?
Mr. Chairman, that's troubling on many levels. I mean,
That exact quote, that's
Yeah.
troubling on many
there
levels.
are reasons why we do background checks. And if I'm just looking at code, background check. I mean, there's a reason we have licensure, because we can hold entities accountable. There's a reason we know who the designated licensed person is for all answers when we send a subpoena to them and things of that nature. If it's just code, we have to work through all of those issues and many, many more.
Sure, that's a very fair point. In some respects, I think it makes it easier because you're not regulating an entity where there could be nefarious characters involved. If you have the ability to understand the code is it. That's all there is.
I like skepticism. I have met with convicted felons in the last month who have come up with novel approaches, who would gladly use code as a subterfuge to get licensed in my office.
Involved there?
Again, that's the human, not the code. Would be my response. And if we have an ability to regulate code, I guess my point is that's going to be necessary at some point. If decentralized finance continues to gain adoption.
This may take some revisiting actually for our next.
Point well taken, Commissioner. Thank you.
Thank you, Mr. Chairman. Commissioner, do you have the staff to handle that from a technical standpoint? You know, the coding and all that?
President Weston, when we're talking about with regard to the last question.
Yeah, in regards to this.
Oh, not in the list.
Another appropriation.
Well, my understanding though is you don't need a direct appropriation. The interest that you'd be comfortable with would be the ability to have a 250K, up to 250K authorization for an assessment that you would then be able to utilize for probably like 900 series funds to bring in experts. Is that fair?
Mr. Chairman, and if things took off, I will ask for personnel at some point. But until they do, I talked to these other states, they actually had inbuilt into the legislation, they had multiple people assigned to the office, categorized, pay levels and put in there, and they're holding off filling it at this point.
Okay.
Or this type of legislation.
Mr. Co-Chairman,
Okay.
on that point, what did we assign the application fee to? Just do your general budget.
Yeah, where does that application, the $50 go to?
Mr. Chairman, that will go in,
The Sandbox Innovation Fund?
it says sandbox account on page 15, as Ms. Johnson is pointing out.
And I think we created that to provide additional resources, but again, it's a small amount of money and then it goes back to you for facilitating the program. Is how it's done. So yeah, definitely.
Well, and even at the 5,000 level, there's not gonna be enough.
Yes.
Mr. Chairman, if that was the intent was all of it, yeah, we would be looking at significantly more money than that.
Okay. Further questions? Further questions? All right, seeing none, thank you very much. Oh, no, I did have one more. Go ahead. No. So the other discussion point which you raised, we talked about last time, is on page 12, the 4-point lines 35 through 40, which is the idea of whether or not we want what is currently drafted, which is an all-inclusive list of basically anything within your purview could be waived or flexed, but there's the paragraph that says you can't do anything that would violate your accreditation, and you're confident that you would never waive or flex any of these. What we did with the Secretary of State's Office and the Division of Banking was give them more authority than they wanted, and they had the same objection. But we basically said it's really hard to anticipate what people will actually come in with. And if you're statutorily prohibited from doing something, you don't have the flexibility. So that was why we drafted it that way for them. I recall last time you expressed concern that just by having it there might be some accreditation concerns. So I want to revisit that discussion. I think we strengthened the language a little bit to make it very clear in this draft that you will not do anything that will threaten your accreditation, and you won't take any action that would do so. So do you feel that it's drafted sufficiently right now that it wouldn't threaten your accreditation, or do you feel that we need to eliminate the paragraphs that are laid out in the staff note by Mr. Hawkins?
Oh, Ms. Johnson.
Go ahead, Ms. Johnson.
Mr. Chairman, so there's like 21 laws that are required for accreditation, and it's noted in the staff note, a lot of these are in here. There's like a very few number of people in our department who know which laws are required for accreditation, because we have to report to the NEIC annually on our laws. And so we would have to report this bill to the NEIC because it would touch on those laws that we have for accreditation. So, I mean, you know, as long as I'm in the department, I would know which chapters we could not waive, you know, down the road, if somebody wasn't familiar and waived something that they couldn't, we could get into trouble. It's a matter of, you know, education, I think, to know what can and can't be waived down the road.
Is there a way to structure this so that it reflects that? Maybe separating, having two sections effectively. One section would be the ones that you're okay with. Another section, which is mirrored, would be the ones that you object to. And that second section would basically have a much stronger paragraph. You know, the following cannot be waived without consultation with me, or something along those lines to coordinate approval. In other words, you're basically going to say on these ones, we expect them to be denied. But hey, we'll go ask Nate if they're cool with it, that kind of thing. I'd like to give the flexibility. I don't want to limit the flexibility statutorily, because 5 years from now, the opposite problem could happen where all of a sudden you'd be okay with something, but you're not statutorily able to.
Considering that more powerful, I think.
Okay. Thank you. Any further questions? I think we addressed all of the issues, if I'm not mistaken, that you raised in that conversation. Did you miss anything?
I do not believe so, Ms. Johnson.
On page 18, this is line 2, it says if an application is granted. I was wondering if the word there should be approved, if that's what, like say it's picky, but.
Where is that? You said 18?
Page 18, line 2, it says if an application is granted.
Gotcha. Okay.
Did you catch that, Mr. Hopkins? Page 18, line
Line 2.
line 2, granted versus approved.
We can change that.
And then there was one Roman numeral that was on page 7, line 19.
Page 7, 19.
Oh, that's so true. Look at that. We have a Roman numeral error. False numeraling. Pretty sure that's a word. Okay. That saves a revisor bill right there.
I really like the.
Okay, anything else?
That was it.
Thank you very much.
Thank you.
Good.
If we gave out an award for greatest tie.
I appreciate the comment. I'll pass it on to my daughter.
Excellent. Thank you very much. All right, committee, any discussion before we go to public comments? Go ahead.
Mr. Chairman, like I say, this committee will work to go, but I think given all the work that we've done with, et cetera, perhaps a incarnation is we have it now run this reinsurance contracts, this organization. So that was kind of what I was thinking with the background check stuff, is if the intent is to identify and isolate malfeasance or the potential for such, wouldn't it make more sense to give the DOI the ability, with whatever technical experts they hire a contract with, to give them the ability to reject any of these applications versus the old-fashioned way of look at your fingerprints and do all that stuff, where if we're trying to root out malfeasance, they have an expert, whether they hire a contract with. That's the person that can identify and say, well, actually, if you look at this code, this is problematic for reasons X, Y, and Z. So I feel giving them that ability instead of just the old-fashioned, we'll root out the bad guys with fingerprints and a background check would be a better way of getting to what we're trying to do. That's just kind of my thought.
So leave the explicit language of fingerprints and background check out. They would obviously be doing that for any time it applied, but don't leave it in statute hardwired. Is that the concept?
Right. If they're, obviously, if whoever is writing the code, whoever is the owner of the reinsurance business, obviously a bad apple, we don't want them there, but I think they still have the ability to identify and root those people out while also potentially trying to identify and isolate the bad stuff, the code that could really cause serious problems. That was the point.
I think you probably got about 7 to 8 minutes to figure out the amendment that needs to make that happen.
Mr. Chairman, I just want to clarify that that doesn't mean that in the event that there are humans that we're not doing that. Is that correct, Representative Western?
Right, yeah, the idea would be that they still, should they want to, they could do that through their own type of internal rulemaking, through rule and regs.
It sounds like they already do that. They never
Yeah,
apply
I'd
without.
rather pull that language out of here and then give them the ability, again.
Yeah.
So experts that are in-house and contact with at one time. So we can really get at the intent for that.
That makes sense. Okay. Go ahead, Mr. Bill.
May I suggest we just check with our industry folks to see if there's any consternation on that?
Commissioner, thoughts on that? Just basically, it would be removing the
Mr.
language,
Brooks, yeah.
not denying or requiring. It would just be taking it out here and then you can judgment.
Mr. Chairman, Mr. Brooks whispered in my ear saying, gosh, you probably don't want to do that. But thinking through it, we're going to do it. It's whether it's in the bill or not, we're still gonna do it as part of the licensing process. So.
That would be the expectation. If we have it hardwired in statute, there'd be no possibility for exception. As we get in DeFi type concepts where you start wrestling with how to do this, I think Representative West's point is well taken, which is you might not end up with somebody to fingerprint. You might end up relying on an expert for the authentication where the fingerprint isn't really what you're doing. That's down the road a ways. But I think it's thoughtful. It sounds like you're okay with removing that because you'll do it with humans anyway.
If you remove it, we're still gonna do it, is what I'm saying, Mr. Chair. So.
All right. Figure out what language that is. All right, anything else before we go to public comments? All right, we have, I believe, Ms. Wilkinson somewhere. There we are. So let's go to Ms. Wilkinson and then we'll open up for general public comment.
Good morning, Mr. Chairman, members of the committee. My name is Catherine Wilkinson. I'm here today representing American Property and Casualty Insurance Association. Thank you for allowing me to join you virtually, and I wanted to say a special thank you to your staff for facilitating my participation this morning. Mr. Chairman, I do have a few comments on the bill and in general as a follow-up from your May meeting. So APCIA is generally supportive of sandbox bills. We do have a few suggestions to tighten the bill a little bit. We do think that it is too broadly written, but we are supportive of sandbox bills. And with a few suggestions, we find that this draft would be fairly consistent with other sandbox bills that we have seen in other states. Mr. Chairman, specifically, I don't repeat everything that I said to you in the last May meeting, but we were concerned also with the NAIC accreditation standards. But we would ask specifically that the provisions that would not be allowed to be waived would be the authorization of insurers in general requirements, fees and taxes, assets and liabilities, investments, and administration of assets and liabilities. With waiver of those, it would not have a level playing field for everyone in the insurance industry. And we do think that there is room for a sandbox, and we encourage the use of that. We just need to be sure that the financial solvency is maintained and that there are consumer protections in place. Mr. Chairman, one other comment that was made on the licensing entities. It will be APCIA's recommendation that they either be licensed by the Department of Insurance as a licensee or partnering with them. Of course, they wouldn't be licensed until they are granted that, but that would be one suggestion. And we still think that that is a little unclear in that section on page 14, section 2655-104. So we would again recommend that they be a licensed entity or a company partnering with a licensed entity. And Mr. Chairman, in conclusion, I was asked at the last committee meeting to provide some examples of hypotheticals of products that may be interested in looking at the sandbox. I had to ask my client and get back to you. Some of the examples that were given to me were crypto assets, coverage for crypto assets or transactions, or perhaps a policy that only transacts in crypto for premium payments or claims payments. And with that, Mr. Chairman, I would be happy to try to answer any questions that you may have.
All right, thank you for that. Really appreciate it. Any questions?
Happy birthday, Ms. Wilkinson.
Thank you.
Happy birthday. Any further questions other than happy birthday? All right, thank you. Thank you for getting that example case. One question I have, Wilkinson, the list of desired exceptions from exclusion, we'll call it, that you provided, are those all a subset of what was provided in the staff comment as provisions that the commissioner also asked to have removed? I believe that's the case, but are there any that were missed in on page 12, lines 35 through 40?
Mr. Chairman, I do not believe so. We support the commission and any of those that they don't want to have waived again for that NAIC licensure.
And Ms. Wilkinson, you heard the conversation. The suggestion that I offered was creating a parallel section, which was a much higher bar where it would require consultation with NAIC prior to waiving any of those provisions. Is that something that would provide more comfort? I would really like to provide as much flexibility as possible, but I don't want to wreck the train, and I understand the concerns that your community is presenting. What are your thoughts on that as a compromise solution?
Mr. Chairman, I would say conceptually, that sounds great. I'd have to see the actual language of how it's drafted out, but conceptually, I think that could be considered.
Great, thank you.
Mr. Coachman.
Go ahead, Mr. Chairman.
Catherine, I'm just curious if, this might not be a fair question, but if you have any idea, why there's not really interest in the half a dozen other states that have an insurance sandbox law, why there's been no, I don't know if I heard the testimony correctly that there were no applications or there were no granted applications. But I'm just curious in the industry if you have any feel for why that is.
Mr. Chairman, I do not know, but I would be happy to find out and report back at your next meeting.
Anything else? Thank you. Thank you, Ms. Wilkinson. Appreciate it.
Thank you.
Do we have any other comments online?
Mr. Chairman, we have Brendan Maher.
Okay, let's bring in Brendan and then we'll go to in the room public comment.
Hello, can everyone hear me?
You can, Brendan. Welcome. Good to see you. Please introduce yourself.
Oh, wonderful. Hold on, I have a text message there. Yes, hello. My name is Brendan Maher. I am a MIT Media Laboratory alumnus, and I am part of the working groups here for digital identity, the working group for NFTs and DAOs. So it was music to my ears hearing the comment of, if it is just a piece of code, had to make me chuckle there. What's interesting here is the sentiments that were just spoken by Ms. Wilkinson. And it is the fact that fundamentally, what I understand in this space, which is very little because it's not my expertise, but the DeFi and NFT space has an entirely different set of risk. The risk and risk models are entirely different. And to capture that marketplace, it requires an entirely different approach and sandbox methodology and set of statutes. So I really urge the committee to take the precedence of sentiment by Ms. Long regarding the move for the innovation in banking in Wyoming and make essentially something which does not have the same requirements as the traditional reinsurance industry. I think that would serve Wyoming very well. That's all I have to say at the moment.
Thank you very much, Brendan. Appreciate it. Any questions for Mr. Maher? Thank you, Brendan. Anything else online? Are we done online? All right. Anyone? Public comments here in the chamber? Come on up, please join us. Welcome back. And again, for those watching at home, please introduce yourself, and we appreciate it.
Hi.
Oh, good morning. Thank you again for the opportunity to share our comments in this space, and really appreciate the committee's willingness. It's been really refreshing finding a jurisdiction that seeks to entreat business to come versus continuing the meetings until morale improves, as we've experienced. So I have just several comments just based on, I'm David Duccini, founder and CEO of Silicon Prairie. We're a collection of financial technology companies centered around capital formation and then ultimately liquidity. So we have a ton of experience in the space. I've been involved in the blockchain space since 2010. I also teach a graduate level class in blockchains in the third year for a private university in Minnesota. So just a couple of comments based on the conversation this morning. With regards to setting arbitrary fees for participation, $50 is certainly too low. $5,000 I think is too high, especially given the fact that it sounds like there hasn't been an overwhelming preponderance of applications in other states. I think a fee, a structure much lower than that would be reasonable. Again, with small businesses, $5,000 is actually quite a bit of money, especially when you're staring down a payroll potentially there. And then especially if there's some sort of fee structure that they're going to build a fund to deal with this, I would say that that's probably the right application for use of that. Second of all, we've had personal experience between the ill-defined use of the term approved, especially with regards to securities. Just as a general comment, I would suggest you stick with either making the things effective or not. We've seen a number of cases in states where the word approval causes the regulators to bristle because it implies endorsement, and that's certainly not what the regulators want to imply at all.
I'm Dee Barker. I'm a business partner of David's at Silicon Valley Holdings. We had an example of some kind of stuff that could use an insurance sandbox. So like David said, we help the companies that are trying to issue a financial security. And the biggest fear for companies in that position is like shareholder action. So there are some relatively new laws. For example, the crowdfunding law in our state, Minnesota, had only passed in 2015, 2016. Because they're really relatively new laws to begin with, there's extra fear of the scrutiny, like, oh, am I sure that I'm doing the right thing for all the states, all 50, the blue state, blue sky laws. So we actually have a vendor that created a boutique insurance product around the issuing of these exempt securities and investment crowdfunding. So it protects the platform, which is us, it protects the issuer of the security, and it protects the investors in the security for a year around the issuing of that. So if there's any three of those parties has some sort of problem, that the issuer of the security doesn't have to go to court and duke it out there. There's just a policy that kicks in, and whoever is wronged or perceives they've been wronged can be made whole. So I would see the point of a insurance sandbox would probably be when there are some relatively new laws and there's not a lot of clarity to protect people who might want to get in but don't want to get sued for $1 million.
Yeah, a couple other use cases, Mr. Chairman, would be essentially self-insurance. If you look at organizations that elect to have self-insurance with regards to healthcare, that might be another potential use case for this. I also say that with regards to capitalization, I know like in the banking, the spider or speedy, that you've got essentially 100% asset coverage. You could also obtain something similar through a reinsurance product or a bonding through essentially a fintech in a sandbox. And then with regards to the comment about a level playing field, like these big companies can also spin up subsidiaries to play in the sandbox if they want to as well. Again, I would say let's not strangle the baby in the crib here.
The last piece I was thinking about, since we are primarily technologists, like David said, he's been in since 2010 and has actually written a whole coin himself, has about a dozen patents out of Wells Fargo for blockchain and banking. We're very, very deep technically in that. And I think the idea that government would be able to keep up with the software code would not go the way you're hoping it would. Software engineers have the ability to manifest new reality way faster than the process of law would catch up with it, in my personal opinion. What we've done for ourselves to help de-risk, because obviously we don't want fraud, remembering that fraud is always still illegal. You don't have to, have new medicine for that. But we require the issuers that want to use our platform to have a securities attorney. If they can't attract an attorney, then that's a nice ruler for us. And then the attorney is also responsible to do those bad actor checks because they're not wanting to risk their license by facilitating fraud.
The last comment, if I may, Mr. Chairman, is around the idea of and I appreciate the idea of taking fingerprinting out of, because you're not going to be able to fingerprint the software per se. You can certainly get a digital signature of it, but I would say there are good analog models with regards to identity through attestations, whether it's a notary event or in the case of securities, we have what's called medallion stamp. It acts essentially as a higher level notary event that also includes an insurance policy as part of that. And so I could conceive of a model where a piece of software through essentially a voting like event could obtain a digital identity that could be confirmed that also included some sort of higher level assurance that it was in fact right what it said it was.
Good point. Questions? Go ahead.
On the application fee, Utah has a $500 application fee.
Oh, for sure, absolutely.
Further questions?
I mean, the cost to say no was pretty low. I mean, I'm not insensitive to the cost of the staff to spend time, getting up to speed and learning this stuff, and also the need for getting outside consultants to weigh in. I would just say, it's not your today problem that you have thousands of applications flooding the office. I
When
would
you
say,
get too many and then raise the price.
right, exactly. Yeah.
Anything else? Thank you. Appreciate your testimony once again. Any further public comment on this topic? Further public comment? Seeing none, public comment is closed. Back to committee. Mr. Co-Chairman and committee, I'm inclined to ask for the amendments that we sort of bounced around and then bring this bill back to the next committee meeting, because I think we would like to see and get some feedback on some of the changes. Is that acceptable? And we can go through those comments, but is that a reasonable approach rather than act today, Mr. Butcher? What are your thoughts?
Mr. Chairman, so you're suggesting that we, by consensus, decide upon what amendments we would like staff to incorporate, and then we consider the bill for final approval or not?
Yeah.
Is that the idea?
That's exactly right, Representative.
Okay, and along that line, that procedure sounds fine with me. If I may, with respect to one of the amendments that we talked about quite a bit on page 12 of staff comment, paragraph 4, lines 35 to 42. The amendment I would prefer to see would be to accept the Department of Insurance recommendation, except for the last two lines relating to the licensure issue. I'm not as fond of that proposed change.
Thank you. Is anyone else, is the rest of the committee comfortable with
Let's do
the
this,
idea of the
Mr.
process? Go ahead.
Chairman, why don't, just to make it more official, why don't we take a motion to move to the next committee as a draft?
All right, let's take a motion on the bill, then we amend
Just as a
it,
draft,
and then
just to
we,
move it as
okay. Is there a motion to move the bill forward the next meeting? We've got Senator Cross, a second. Got a motion and a second. All right, let's walk through amendments, discuss them, and then figure out what that next draft is going to look like. I've got a list of concepts. The first concept is the fee, application fee. Is there a motion to amend the application fee from $50 to something else?
Yeah.
We've got a motion to move it to 500. Is there a second?
Second.
Got a motion and a second. Any discussion? Moving the application fee to $500. Discussion. All those in favor say aye. Aye. Opposed, no. Motion carries. Go ahead.
The non-voting members should not be voting on any of this, right?
We vote, actually, we'll
On amendments?
It's a draft.
Yep.
The motion is draft bill. We just have, it's not a final action,
Yeah,
so we
it's not a roll call.
we definitely can make amendments
Okay,
and
Yeah.
vote on amendments.
thank you.
Yeah, want everyone's input on this, and please feel free to vote on the amendments. We'll get it right, and then final roll call vote. The legislation is where we back up. Yep. We've got a request on page 16, the 90 days after a completed application as opposed to after an application. Is there a motion to make that amendment? Senator Cross, second. Mr. Co-Chairman, any discussion on adding completed? Seeing none, staff, you understand that? Okay. All in favor say aye. Opposed, no. That motion is carried. The next one I had noted was this concept of must be licensed, which you see in the language on page 12, lines 40 through 42. Conceptual amendment that we discussed was the idea of making it so they couldn't approve the application to the sandbox until the entity was licensed, but that they could apply before they were licensed. If are you getting that difference? Go ahead.
I may just be confused about it. I thought that example, in 2655-104J, the existing language essentially allows the original issuer of the insurance product to direct sell the products without having to go to the call. I may be misreading the draft. I thought that it would be, for example, 2655-104J as drafted sort of allows, for example, by health insurance through the healthcare exchange, just do it online, you don't have broker, basically, now, right? And so I thought that the import of 2655-104J, for example, for them to make that, but I may be misreading the draft. So my general thought is that the winds of history, I think, are flowing against brokers of all kinds, right? Like stockbrokers used to be a good job, now it's extinct, right? Travel agents, same thing.
The general concept, and so, I mean, the J provision, a person authorized under subsection F of this section to participate in the insurance sandbox shall be deemed to possess an appropriate license for the purpose of federal law requiring state licensure or authorization. So the idea there is there's an assertion of a license that you possess, whether you do or not, and that's the concern, regardless of really the underlying implications of what we're talking about. We're asserting a license when they have not been licensed. That leads to the concern by the commissioner and regarding NAIC accreditation.
So maybe I misunderstood. Is that an NAIC requirement then?
Okay. Yeah, so that's the concept.
I'm not trying to end runs around NAIC.
Okay.
So if all of that in that whole paragraph is needed to comply with NAIC, then I agree with the department's recommendation. I'll withdraw my comments and apologize for the 2 minutes we spent talking about.
But is there a motion to do the conceptual amendment and then conform to allow the application to occur without a license in place, but the approval requires a license? Got a motion, co-chair? Motion and a second. Any discussion on that? Seeing none, all those in favor say aye. Aye. Opposed, no. The motion is carried. Is that concept clear, Mr. Hopkinson? Okay. The next conceptual amendment addresses the language on page 12, lines 35 through 40. The insurance commissioner requested that those provisions be eliminated from the draft. We discussed and had a conversation about creating a 2-tier system where a separate paragraph is created where these provisions require coordination, explicit coordination with NAIC prior to any waiver as a way to keep it in statute, but add a tier of clear, this might not be a good idea. I think that's something that we could have drafted for next time, run the language by the commissioner and make sure that the commissioner is comfortable that it sets the bar ridiculously high, but leaves the possibility there. Everyone comfortable with that? Does anyone want to make a motion to include that amendment?
Motion.
Representative Western, second. Representative Yen, discussion. Representative Stitt, did you want to talk about that?
Chairman. That seems unlikely to work.
I agree, but we're in a realm of unlikely. That's the concept here, where drafting legislation for a sandbox where we anticipate what needs to go in the sandbox and then craft statute around the sandbox assumes we know what the heck is actually going to be applying to the sandbox. We don't. So keeping options on the table, but making sure we don't threaten NAIC accreditation seems like a simultaneous objective that we could move forward with. We don't want to break NAIC accreditation. We want to make that very clear. At the same time, I think it would be a shame if we had to come back and redraft this law 2 years from now because we had a really cool DeFi idea that we could get approved, but well, we left out a Romanette. That makes sense. again, I want to make sure that you're comfortable with that. And we'll look at it next time too. So. All right, further discussion on that point? Seeing none, all those in favor say aye.
Aye.
No? All right, this is an utter lack of enthusiasm. My God. I feel like I'm getting more feedback from like him in the back corner of the audience there. Yeah, there we go. Good thumbs up. And that was a convincing and compelling thumbs up. The next discussion point was the idea of approved versus granted, page 18, line 2. Do we want to make that amendment at this point? Do we want to give it some thought? It's an easy one. And I don't actually, I'm not.
I'm ambivalent, but comment regarding securities, and I don't. Mr. Kaufman has it.
Approved versus granted. Is granted sufficient to check the statutory conceptual box? An application is granted.
Mr. Chairman, I think that's a fair question. Frankly, I think we had been tweaking some of the language, changing it to approved from granted, and that was one that was just missed. So I think other places in this bill draft, I'd have to double check, but I think we use the term approved versus granted already elsewhere. And so it would be more consistent to make it approved at this point. If the committee is concerned about that, then we should change those other approves to granted. If there is some other concern. But if the department wants approved, I don't. That's a good option.
Maybe, but
I move that we replace approved. Replace grant.
got a motion. There's a second. Got a second, Senator Cost. Motion by Representative Stiff. Any discussion? All those in favor say aye. Aye. That's better. Opposed? No. That motion is carried. Go with approved in the next draft. And then de minimis change, page 7, line 19, fix the Romanet problem. That was all I had registered back to the committee. Any other amendments to propose and discuss? There we go. Yeah, we got one ready. All right, Representative Western.
Thank you, Mr.
Bring
Chairman.
it.
Circling back on our background check fingerprint stuff, I would like to propose a conceptual amendment to be drafted and then considered at the next meeting. Not to vote, to actually approve the amendment.
Do that one separate.
Yeah, like I said, because I think if we have it drafted, like if we approve to have it drafted, it gives our insurance to look through the language and everyone else actually consider for next week. So that's my intent, but I would like to see happen. Specifically on page 15, starting on line 9. That language up, giving also discretion to pull additional language as it regards to some of those background checks. The other one I did find page 30, line 1. And to replace it with language that gives authority to hire or contract with personnel that have expertise in insurance coding to verify whether that specific code passes their standards. Helps them identify their own cases.
Representative, I think there's probably two separate concepts there that can be amended. With regard to the removal of the fingerprints, if you want in the next draft, and I think we generally favor that, we can just say remove that paragraph and form and have that brought to us in the draft. I think that's reasonable, unless there's objections, but I think we're all pretty cool with that. Anyone have any concerns about that? All right, so let's take that as a motion. Got a motion from Representative Western and a second from Co-Chairman Olson. Any discussion on removing the fingerprint provision and conforming? Seeing none, all those in favor say aye. Aye. Opposed, no. That motion is carried. With regard to, and I had this written down above, but just to have a star next to it, which is really why I didn't mention it. The appropriation concept should cover what you said, where if we add a paragraph that provides the commissioner authority, and we can get the language specifically from the commissioner, but authority for $250,000 of assessment that can be brought to bear to bring in experts as needed to implement this act. then I think that covers that other concern, write it broadly enough that they can make their decision. And it's out of assessment money, so the beautiful thing about it is it's not appropriation of new funds, it's an internal appropriation through assessment. And hopefully that could get through the appropriations committee. Representative Stiff, what do you think about that? Is that going to be something the appropriations committee might be comfortable with?
Mr. Chairman, I think so, because it's self-funding.
All right, can we get a motion on that suggestion?
So, the amendment's been provided, just. If you allow, would it be worthwhile to include language specifically as it relates to these contracts? And coding? Or is that broad enough that the DOI?
I don't think we need to, because the rest is so broad for the exceptions that they could literally create an exception for that language if they saw the necessity of it as part of the sandbox requirement, and if they were willing to do it and basically work within the verification process to credential through like a digital identity as opposed to a fingerprint. And so they would basically internally say, well, we're going to make an exception, we're going to call it equivalent. Maybe we have to consult with NAIC to verify that this is authoritative and move forward. So I think they're covered based on the rest of the way it's drafted.
Yeah.
All right, is there a motion to provide that 250K authority and work with the commissioner to determine the language? We've got a motion and a second. Representative Stiff, Representative West, go ahead.
Representative Stiff, so motion is just to authorize the department to use its own 900 series.
So.
I think they wanted the authority to provide additional incremental assessment to develop the 250K that would go into their 900 series.
So
it's not an appropriation, but they want authority to change their assessment so that they can bring in 250K.
I didn't even go to appropriations then.
Probably. In the Senate, everything goes to appropriation. So it will. Maybe not. All right. Any further discussion on that?
Question.
Seeing none, questions and called. All those in favor, say aye.
Aye.
Opposed, no. That motion's carried. Any further amendments before we table this to next meeting? Go ahead.
I just had a question about what we did with lines 9 through 15 on page 15. Because it's my understanding that Representative Western's motion included that, but then when we revised the motion, we talked about fingerprinting only. Section lines 9 through 15 on page 15 deals with criminal history check. Right, and I'm not comfortable just getting rid of all criminal history checks. To me, it might make sense is instead of saying the person submitting an application, all their persons, might replace that phrase with individuals who are substantially involved in the development of insurance product criminal history check, right? Because your person or legal entity submitting the application might be some.
I think what we were relying on there, and honestly, it's my understanding we basically eliminate that paragraph, but I think what we were relying on is that, this is not the entirety of the department's or the commission's authority. And they made it very clear they were going to do all of these checks, whether it's in this bill or not, because of their other authority, which I can't imagine not being the case. So wherever there is a human, they're going to fingerprint them, they're going to do a background check, they're going to rake them over the coals, and they're going to do their due diligence, as they traditionally do. The concern here is for us calling it out explicitly within this act, we might cause our own little internal inconsistency that breaks the idea of some DeFi type process down the road.
Mr. Co-Chairman, we're not saying in this statute that a background check of any sort shall not be required. Therefore, the statute is silent. We provided section 3, which allows them complete discretion beyond what they want with background check. As long as we're not making the policy decision on the background check. We have the statute, which doesn't mean we're giving them from requiring a background check.
Mr. Chairman, it does seem like we're making the policy decision to say that a commissioner can decide not to do a criminal history check if the commissioner just busy. And I'm not sure that's a great policy choice, you know. And I get it that.
I think they would,
I don't think there was.
it would violate, my understanding is that they would actually be violating NAIC at that point in time, and they would risk their accreditation if they didn't do background check. So just to be NAIC compliant, they're going to do that. And obviously, we say elsewhere in here, do not do anything that would threaten NAIC compliance. So I feel like we're, triple belt and suspenders on this one, and this would be the fourth layer. I don't even know what the fourth layer of belt and suspenders is. Somebody come up with that one. All right. Any further discussion before we table for next time? All right, seeing none, without objection, it's tabled till next time, and it is break time. Let's be back at 10:45 to start back up a decentralized autonomous organization. Are we rolling? We're live. Next item on our agenda is decentralized autonomous organizations. We obviously passed the first of its kind piece of legislation last year, or this year, I guess, in the legislative session to recognize DAO LLCs in the state of Wyoming, and we've immediately started working on some draft updates to that legislation to ensure that we're taking into consideration any concerns. So we have a bill draft to consider before us today, but before we get to that, let's take some updates from the leads on that effort. Mr. Kaufman and Mr. Aaron Wright, I believe, is joining us. And then we've got members of the DAO working group with us as well. I see Christopher Allen. I'm not sure who all we have virtually as well, but we've got a good group through our DAO working group that has busily been looking at considering any amendments that we need to make to update and form our DAO work. So with that, Mr. Kaufman, can you present us a little bit of update what we'll be looking at today?
Yeah, thank you, Mr. Chairman. So for the benefit of the group, almost all of these amendments were things that we were working on last year during session, and quite frankly, we just ran out of time to get them done. There was, as we got towards the end of the push last year to get this bill finalized, we got a lot of great input from law professors, practitioners, folks in the technology communities regarding how this was going to be used and some of the concerns. And candidly, most of, if not all of this, is cleanup oriented towards bringing some consistency to definitions with the underlying LLC Act, to bringing clarity with respect to some of the mechanisms and the definitions. One of the biggest themes, at least in my mind, is that we leave the impression in this bill that there are two different types of DAOs, that there's algorithmically managed and member managed. That was not the intent. The intent is they're all member managed. We just want to create a burden on these companies to express to what extent they're going to be managed by algorithms or software, and make sure that the underlying information is provided in their filings. So I think a lot of this clarifies that. And obviously, Mr. Hopkins will go through the bill in detail. We could talk about all of this, but I just wanted to orient the group to that. That's really where we're coming from with this. After we're done, Mr. Chairman, I do, in conversations with the Secretary of State's office over the past few days, have maybe a couple of minor additional amendments for the group to consider when we get to that point. But I think that's, for the most part, the background.
Well, thank you. And Mr. Wright, any comments at this time? I see Mr. Maher has joined us as well. He's been working on our DAO working group as well. Mr. Wright, thoughts?
No, I think Mr. Kaufman summarized everything really well, and it's an honor to be here again.
Professor Wright, will you introduce yourself briefly as well? Obviously, we know you, but just for the record.
Sure. My name is Aaron Wright. I'm a professor at Cardozo Law School in New York, and it's really an honor to be part of this committee.
Okay, go ahead, Mr. Kaufman.
Professor Moxery, who's part of the working group here.
There we are. Oh, excellent. Professor Wright, good to see you too. Thank you. So Professor Moxery and Professor Wright are also have been engaged in the DAO working group and are here to support and work on this draft with us. So thank you both for being here. Professor Wright, for coming and joining us here today. All right, any further discussion before we get to the bill that we need to have? Mr. Kaufman, any further thoughts, anything looking forward, or should we get into the legislation?
I would defer to Professor Moxery if he had any additional comments.
Professor Moxery, Professor Wright, do you want to come up and join us? Yeah. Introduce yourself, please, both. Obviously, I know both of you, but Professor Wright, if you want to give a little background also, and even talk about some of the activities that engage in. Great, just an introduction for me.
So I'm Professor George Moxter. I'm a professor here at the College of Law, University of Wyoming.
And I am Joe Wright, no relation. A law professor at UMKC in Kansas City and have been working in blockchain crypto space for about 3 years. Published a book, Short and Happy Guide to Bitcoin, Blockchain, and Crypto. It's really for policymakers to understand exactly what's going on. And happy to be here.
Thank you very much. Appreciate it.
So I did have, Mr. Chairman, just a couple of questions which may have been answered already. But in, let's see, in the amendment file, and I've got version 0.3 here, in section 102A6, it said membership interest means members' ownership right in a DAO, which may be determined, and it has a list of things there. And my question, and this might be a law professor question, and I apologize in advance, as I think ahead to litigation, and the question is, so two questions. Which one of those things controls if they're in conflict? And what's the default rule if neither one of those determines a member's membership interest?
Well, Professor Moxley, I think we'll have kind of staff walk through the bill first. This is the first time that many of us have seen it, and then we'll get to some of those nuanced questions, details, and it'll give Mr. Kaufman time to think about the answer to that.
Very good. My only comments are those sorts of detailed things. Otherwise, I think it's great.
All right. Anything else to add before we get to the bill?
I think it makes sense to get to the bill first because they have some of the same transitions.
Great, thank you. And we're very glad to have both of you here. So with that, we'll give you two gentlemen a break for a moment and we'll get up here to walk through the bill with us.
You can stay there.
Yeah, you're free to stay.
Thank you, Mr. Chairman. David Hopkinson with the Legislative Service Office, reviewing 22 LSO 63, working draft version 3. Mr. Chairman, would it be your preference for me to walk through kind of in detail or just go through kind of what's new since the last meeting? Fine.
Let's see, Mr. Co-Chairman, I think honestly walking through in detail would be beneficial at this point. I think. Let's do that.
Thank you, Mr. Chairman. Happy to do that. The bill draft, I guess just for an initial overview of what it's doing here versus what's currently in the law. It removes the definition of quorum and kind of the concept of quorum throughout the bill. It removes the distinction that was made between member managed and algorithmically managed. And it adds some new dissolution methods. Additionally, there's primarily some cleanup in the bill. On page 2, majority of the members, the changes that we see there to that paragraphs on lines 12 through 21. Again, here we're removing quorum. We're also removing the idea that a majority is more than 50%, or introducing this idea that a majority is more than 50% or as defined, kind of giving an option for majority to be less than 50% if that is what the organization desires. On page 3, changes we see through membership interests, change the ownership share on line 2 to right, deleting the member managed language. And then it's allowing a blockchain or adding language there to allow a blockchain to determine rights. Smart contract, some cleanup there on lines 15 through 17, and adding the language relying on a blockchain. So it says core program language relying on a blockchain. Page 4, adding a comma on line 6, just clean up. On line 13 through 22, again, getting rid of member, the distinction there, member managed, and making a statement or requiring a statement establishing management mandatory. On page 5, lines 3 through 9. This is just clarifying and requiring a fully autonomous decentralized organization to have upgradable smart contracts. Some new language from the last meeting on line 8, able to be changed to capable of being, and that's just some clarification and cleanup there. And then the staff comment is new from what the committee's seen before. Here proposing an alternative method if the committee desires to require all decentralized autonomous organizations to have a smart contract capable of being updated. The language could be tweaked as in that proposed paragraph or subsection D. There is the additional question of if this is even the appropriate place to have that language. And so further on, there's the option or presented to the committee that perhaps requiring upgradable smart contracts, even if those smart contracts are implemented after formation, because the way it is right now, that would only require that to be the case upon formation. But if a decentralized autonomous organization were to not need it at the beginning, but later want to change how they're operating, we could tweak that language so that it would be required all the time by adding the language you see on page 6, lines 8 through 15 under the management section, tweaking management centralized autonomous organization. And then frankly, I think we could just get rid of the subsection D. I will double check the insertion there. Take a second look at that. But those are the changes we see there. On page 7, at the top there is just clarifying changes on lines 1 through 3. On line 5, we add dispute resolution, and this is adding that to the articles of organization that they would have need to address that. Then the articles of organization need to address dispute resolution. Further down, lines 14 and 15, just adding the articles of organization, the operating agreement, if it does not address everything provided for in the articles of organization, that the rights, obligations, rights, duties of the members and operation of the decentralized autonomous organization may be supplemented by an operating agreement. At the bottom of the page there, 21, 22, again, kind of getting rid of the member managed language. Clean up there. On page 8, the lines 11, changes there, member management, and then clarifying some voting requirements. On page 9, respect to rights of members and disassociated members, it adds language, clarifying language, it adds disassociated members to those who wouldn't have a right if to certain information if it's already on the blockchain. Bottom of page 9, just some cleanup language there, cleanup change there on line 19. Page 10, lines 5 and 6 there, just deleting member managed. Change here on line 10 and 11 from what was in the previous bill, changed or added language, or is no longer under the control of at least one natural person. Originally that said at least one member, that's been changed to natural person, which was requested of the committee at the last meeting, so that a decentralized autonomous organization would always have to be under the control of at least one natural person. The new paragraph 6, and these are all just reasons for why or when a decentralized disorganization is dissolved. In paragraph 6 there, where all the members have withdrawn. And we see a new paragraph or new subsection C from what we saw last time. The intention with this paragraph is just to add the option, and I'll go ahead and read it because it says any interested party may petition the Secretary of State alleging the existence of any of the factors requiring dissolution in subsection A of this section. The Secretary of State shall investigate and respond to the petition within 90 days of receipt, and upon finding the existence of one or more factors requiring dissolution under subsection A of the section shall dissolve the decentralized autonomous organization. So that's creating an option for an interested party to petition to have a decentralized autonomous organization dissolve. The Secretary of State look into that, and if they find that it should be dissolved, they would dissolve it. Appeals on page 11, a couple of sections there. The language of those repeals are included in the staff comment. Gets rid of the definition of a limited liability autonomous organization. Gets rid of the definition of quorum, and get rid of language again related to quorum in 1731 111A3. It would be effective immediately. That I would stand for any questions.
Thank you. Any questions, Mr. Hawkins? Go ahead, Representative Stiff.
Mr. Chairman, thank you. Thank you very much. Generally speaking, it looks like the articles of organization in a decentralized autonomous organization are going to have a lot more information in them than our current, say, articles of organization for a limited liability company now do. And the question is with respect to the requirement that they, early on in the bill, that the articles of organization must specify how, find it.
Shall establish, this was on page 4.
The decentralized autonomous organization shall be managed by the members, including to what extent the management will be effective algorithm. Question about the word how and what does you have an understanding of the scope of that? Because right now you're obligated to say whether you're going to manage it with a managing member, reserved to the members, or have a day manager. That's kind of your three choices, and it's like one line, and it's really simple. But theoretically, if you describe how it's going to be managed by the algorithm, it almost implies that you have to put the algorithm in your article of organization. How is kind of a real open-ended thing. I didn't know if a way to limit that scope to make filing the article is more manageable, or if there's a way to specify so someone knows what to say, right? If I'm filing on these things, what do I say about that?
Thank you, Representative. But I think we go to Mr. Kaufman on that. I think it is intentional. It's along the lines of how you're reading it. Go ahead, Mr. Kaufman.
Mr. Chairman, I think it's a great point. I can tell you what our conversations have been to date about that. Sort of like in the underlying LLC Act, the default, if you don't specify otherwise, is member managed, right? The Act structures it so if you want to be manager managed, you have to make that clear election either in the articles or your operating agreement. That's kind of what we tried to do here is right? You're obviously member managed regardless of what you do. But to the extent you are going to rely on particular, right, smart contract or algorithmic means for management, you need to make that clear. And so how clear you make that, to your point, is a great question and something that we have debated. It's also the reason that we require some public identifier to point to whatever protocol they're using for that management, which will come up later because we had some more discussion to do about that. But I just wanted to give that context with respect to at least how I was thinking about it when we talked about this last time.
Mr. Go ahead, follow up.
Mr. Chairman, so Matt or Mr. Hopkins, do you think it means that I need to put a copy of the algorithm in my article?
No, Mr. Chairman, I think you have to put some identifier with respect to what that code is, what that smart contract is, what that protocol is. That's required in the articles now. That does have to be in the articles.
And Representative Stitt, that there's no question that there are more requirements and more detail in our Dow LLC Act than our traditional LLC Act. And that was honestly by design, recognizing that there's a lot more question and a lot more that we kind of feel like we need to know to be comfortable with it. So certainly when we were presenting it to the legislature, those additional characteristics, the public identifier, that identifier is going to be pointing to publicly available smart contracts that provide information about the management. You can have, for the articles, you can certainly have underlying smart contracts that are pointed back to and member agreements that are elsewhere. But a lot of that was intentional for the first state doing it. We're trying to make it as transparent as we can to allow it to happen, but to have some light shined on it. So I think that's kind of the concept of trade-off, to assume this additional new potential risk, but still grant the limited liability protection. Go ahead.
Mr. Chairman, thank you. Slightly different question also, Mr. Hopkins, relates to the formation here in the bill. It says that your smart contracts must be capable of being updated, right? So the requirements of the smart contracts need to be updated makes total sense. I find it curious, though, that it's under formation, because how would the Secretary of State ever know? Right? I mean, formation right now for an LLC happens when you press the button. You filled out the boxes, and boom, the computer spits out articles of organization and says you have a certificate of organization, you are now organized. If it's a condition of formation that your smart contracts are capable of being upgraded, how does the Secretary of State's office know if that's true? Why is it in formation? I mean, I would make sense to have it as a requirement that if you're going to be a DAO, you have to have this kind of smart contract. I find it administratively awkward for the Secretary of State if it's a condition of formation.
Hopkins, I think that's the reason why you put in the alternative language of putting it later in the legislation. Go ahead.
Thank you, Mr. Chairman, and that's correct. I agree that it is somewhat problematic to have it there in formation. And so I think it would be certainly a good idea to move that requirement to another section. I think some of that's covered by that proposal to move it into management. So that the DAO has to have it always be upgradable if that's the desire of the committee along those lines. But I agree there's a potential issue there.
So Representative Sept, you'll see on page 6, anybody who's following along at home, page 6, the management provision, the new language there, lines 8 through 15 are a proposed alternative to this draft language to what we see on page 5, where that requirement would be put under the continual management operation provision as opposed to the formation provision, and then we would theoretically delete the D paragraph, and I think that probably addresses that concern. Is that
Mr.
fair?
Chairman, if I read, I would have seen that. So thank you. Yes, I got that.
Feel free. Any further questions? Further questions of the draft? All right. Seeing none, thank you, Mr. Hopkins. And I'm going to go back to Mr. Kaufman and Mr. Wright to see if there's anything that you would like to clarify based on this draft before we start getting into some of the public comment. Mr. Kaufman.
Mr. Chairman, I'll just rifle through. I got a couple comments here. Try to be quick. With respect to the changes that were just being talked about, I think that is a valid and concern that Representative just brought up. It's something that we recognized. Letting the cat out of the bag here, but that's one of the reasons I would recommend looking at that new addition of the subsection D, clarifying net management and removing from the formation requirement. I think it just makes it a little bit more uniform across the board. Mr. Chairman, I think the only other thing that I really wanted to specify was 2 issues that have been brought up, and I don't know if the Secretary of State is available today or not, but as we've been filing as entities and working through with the Secretary of State's office, 2 issues have come up. One is
Right now, I mean, the Secretary of State's office realistically doesn't have a way to vet or verify if a public identifier is real, and we kind of knew that anyways. We still want that requirement, I think, as a policy matter in the article filing. But the question has come up that a number of, the mass filers, the registered agent companies and things are mass filing these with a placeholder public identifier, and then there's no way to really follow up and verify that. So the Secretary of State suggested one alternative might be, it's not in the draft revisions we have now, but might just be a simple 30-day requirement. If you haven't amended your filing and included a valid public identifier within 30 days or something like that, that the filing's void. I think that's worth considering, and I just throw it out to the body to consider, because if there is some web address, valid public identifier in there, obviously that's great. We're not trying to make it a factual determination by the Secretary of State's office, but if they just what effectively is happening is a lot of people are putting in there to be determined. So they fill the box and the filing is being accepted, but there actually isn't a public identifier in there. So I think that's a reasonable suggestion. The other one along the same lines is we have in here some language regarding an individual's ability to petition the Secretary of State's office if it's deemed that the DAO is no longer engaged in a lawful, purpose, or no longer has any individual person that is capable of exercising some participation and control. Again, the reality of that circumstance is the Secretary of State's office the right place to do that, or should that be the district court, where the district court already has authority? Well, I'm thinking out loud here. Maybe we should make it the Chancery Court, quite frankly, and there's a shorter time frame for that, and give that exclusive authority of fact finding to a court rather than the Secretary of State's office. That was just, I'm still supportive of the idea, and the idea that we didn't want these entities to get away from us. So there's, a shut off switch. But as we've thought that through some more, that might be more cumbersome than we thought with the Secretary of State's office. I think it's a relatively simple bill fix to just switch that to the Chancery Court, for example. It becomes a remedy of any party, whether you're a member or non-member. You could petition the district court to say, I don't think this DAO has a legal purpose, or I don't think anyone's in charge of this DAO. And then you're doing a fact-finding exercise with the court and a proper finder of fact to issue an order. So we've had those discussions. I wanted to let the group know. Again, those amendments are not contained in this draft, but I wanted to share that conversation.
On that point, with the discussion about district court or Chancery Court, which honestly makes more sense. I don't think we want to ever put this. We haven't done this in the past, where there's a requirement to utilize the district court, or excuse me, the Chancery Court. The Chancery Court is always an option that's available if you want to take something out of its existing court under certain circumstances and move to the Chancery. Would that be an appropriate remedy where we say perhaps district court or Chancery Court?
Mr. Self, I just want to prove all these people wrong that don't think the Chancery Court's going to be busy. So I'm showing my bias, but yes, I think either court could be potential. But as the Chancery Court, I do think is obviously designed to have some specialized expertise in these areas. It might make some sense.
Okay. Go ahead.
I don't want to get our conversation too far afield, but I'd be in favor of, to the extent that it's just an equitable remedy of dissolving a company, that you could vest the Chancery Court with exclusive jurisdiction. Because it's fast.
The challenge there, the only concern I have there is that while it's fast, it's sort of a pay-to-play court system. And we typically don't deny access to court without pay-to-play. Now, almost anybody who would want to do this, I would expect would want fast and would be willing to pay the Chancery Court fee. But that's the concern I have, is that I don't know that we should be denying access to courts for those that, go ahead.
To that point, I mean, in the district court, you have various fees depending on your action.
Which we pretend are not denial of access to court. Right.
There are some things that don't require a filing fee as well. But I mean, I don't remember where we ended. Was it 1,000 or did we go down?
I thought we were at 1,000.
Yeah, I mean, you've got to have your point is well made. You have to have a real interest in this DAO not existing. straight or dissolved in some fashion. But I think you could adjust that by adjusting the filing fee. But I really do like the concept of giving, I want to give the Chancery Court something to do, but I think it's an appropriate, it's the right venue for it, but I also agree with getting something in the hopper for them. And I would take it, I guess, from the other perspective is the Secretary of State's perspective. And we don't have the office here to testify on their ability to vet those, depending on the volume that they'll get, but I don't want them with standard answer that we need more money or people to be able to do that when we have this other transfer report fund ready to go. So I think it's an idea.
Yeah. No, I think it is the best place. I just would be cautious about restricting access. For the discussion on that, I like to say it's an important idea. Do we have the Secretary of State online or anything? I know that we put them on, get their info. Okay, for the discussion on that, anything else, Kaufman, that you've got?
Mr. Chair, thank you. And first, my spotty memory. What was the whole purpose of having an identifier in the first place?
I mean, Mr. Chairman, transparency so that individuals who might become associated or members of these DAOs have a place to go where they can be assured that they're pointed to the right direction for whatever protocol is being used. So it was a transparency thing.
So, Mr. Chairman, that means I think X has DAO. I want to see if they do. I can access by the name, our number, whatever it is, not confirmed. This LLC does have a DAO. This is its identifier. For each DAO, correct?
Correct, Mr. Chairman, correct.
Yeah, and recall, Representative, that also with the requirements that we have about transparency of the articles, we're going to be on a blockchain as we have this drafted. That identifier should provide the information, should provide the public with the information then that's required under the rest of this statute. Anything that else that is requested, you should be able to determine based on that identifier. So that's sort of the concept. It would just be tremendously handy if we had something like a API from the Secretary of State's office to integrate a lot of these concepts. Seamless and transparent.
I guarantee they're listening
now. Mr. Chairman, maybe even an open source.
Could be. Yeah. We could get some people to volunteer to just write it for us. That'd be 2 years ago. Any further questions before we move forward? All right. With that then, let's go to our working group testimony and see what concerns we have. I see that we've got Brendan, we've got Christopher Allen, and then we've got Professors Wright and Maher. I don't know who else we have out there, but we'll start here in the chamber. Professors, let's get to those concerns that you were raising a few minutes ago.
Thank you, Mr. Chairman. And I think they're relatively minor, which I'm very pleased about to be helping again. Two of the questions just concern default rules, right? And the first one was on page 3, 1 through 11. And it talks about how the membership interest is defined or determined by these list of things, the articles, the operating agreement, or the blockchain. And just two questions related to that. If two of those things are in conflict, which one controls? And what's the default rule? Let's say none of those determine the members of interest. Do we have a default rule? And I suspect the answer to the second one might be that just the LLC Act controls and it's per capita, but I did want to confirm that.
So let's actually stop there and just get to it. Go ahead, Mr. Kaufman.
Mr. Chairman, I can confirm that we did contemplate the underlying LLC Act being the default rules wherever these rules are signed. But I hate to call on Professor Wright. He might have to jog my memory with respect to our conversation about the hierarchy, because we did discuss that, and there is a provision later that discusses if there's a conflict between the operating agreement and the articles. I don't think we have a specification that I recall right now about if there's a conflict between the articles and this, whatever the protocol is.
I don't know that either.
You remember that or not?
President Wright, go ahead.
Yeah, thank you so much, Chairman. That's my recollection, Mr. Kaufman, is we specified an order of hierarchy. I just have to dig that out real quick towards the end of the bill, but not that latter point. Let me see if I can find that really quick.
And I'm not sure we have that paragraph in front of us. Do we have that paragraph in front of us?
I don't know if we do, actually.
I have to go back to statute for that. The hierarchy of. Go ahead.
Page 7, 1731, 108. Contains the language that I was just referencing, and that is to the extent the articles for smart contract don't otherwise provide.
Right.
Then the rights it's set by the operating agreement. So I think that if I'm reading that the same way everyone else is, the instance of a conflict between the operating agreement and the articles of the smart contract is resolved, but not if there's a dispute between the articles and the smart contract, like Professor Boxer is suggesting.
Then I agree, Mr. Chairman, with Mr. Kaufman's
Okay.
reading of that.
So just to reflect, then the idea is a circumstance where you've got a smart contract that is operating that is in conflict with the articles of organization themselves and a hierarchy. I thought we had language in the original bill which basically says that the underlying smart contracts have a dominant position because they're literally doing something, and you would have to amend those through the amendment discussion if you had a problem with it. I thought we had that, Mr. Hopkinson.
Mr. Chairman, 1731, 115, if you'd like, I'll just read that, but that I think is what we're referencing. It says, the articles of organization and the operating agreement of a decentralized autonomous organization are effective as statements of authority. When the underlying articles of organization and operating agreement are in conflict, the articles of organization shall preempt any conflicting provisions. When the underlying articles of organization and smart contract are in conflict, the smart contract shall preempt any conflicting provisions of the articles of organization, except as it relates to Wyoming statute 1731-104 and 1731-106A and B.
Yeah, that.
So.
Okay. Thank you, Mr. Hopkinson.
So that works. I agree, Mr. Chairman, that the provision that was discussed earlier about putting into the management section the updatability, I agree that that works best. And then one last question is on dissolution. And again, and it would be wonderful if this was already in here again, that would be just great. Which is, are these default rules, right? Or are these mandatory rules? And so in other words, what if the parties in their smart contract or articles or operating agreement specify some other method for dissolution that's not one of these? If I were reading the LLC Act, I would say that these are default rules and they can pick their own rules. But other parts of this act say things like unless otherwise provided for in the art, in where have you. And the word shall there makes me wonder whether that has the sound of something that's not a default rule, even though in the LLC Act it might be. So the I guess two-part question is, are they default rules and do we want them to be mandatory or default rules?
Again, I thought we had and unless otherwise specified, I'm not seeing it here in this language. What's our B paragraph say that we don't see? Mr. Hopkinson, do you have that in front of you?
B paragraph reads as follows: as soon as possible following, as soon as possible following the occurrence of any of the events specified in subsection A of this section, causing the dissolution of a decentralized autonomous organization, the organization shall execute a statement of intent to dissolve in the form prescribed by the Secretary of State. It doesn't address.
Kaufman, Professor Wright, any thoughts on whether the underlying LLC provisions would provide flexibility, or do we need to have something to put this out? Go ahead, Mr. Kaufman.
Mr. Chairman, I can share with the group, I think how I was thinking about this at least, and that was that these provisions were designed to be shall for a couple of reasons. One, again, imagining sort of a true decentralization of the membership where there is no control except for whoever might be that interface with the Secretary of State's office. If that membership so elects, then yes, the entity is dissolved. So that in that instance, it is a shall. Similarly, then where if everyone is withdrawn, or as we talked about with the Secretary of State, if there's no longer a legal purpose, et cetera. So my recollection is this was designed to be a relatively short list of absolute backstop. This is when the entity has to be dissolved.
I think what Professor Moxley is looking for, though, would be like a Romanet 7, which says, or as otherwise provided through part of the organization, or maybe a member agreement, but I don't know. I'm not really thinking.
And Mr. Chairman, I'm not disagreeing with you. I think what I'm suggesting is when we contemplated, these were the ones that could not be modified.
Right.
Mr. Chairman, I agree with, as a policy matter, that certainly makes sense. What I would like to avoid is having someone create an operating agreement that purports to override these, and then we're wondering where we are. So it seems like an anticipatable question, Mr. Chair.
So Mr. Co-Chairman, then if that's the policy decision, we should make clear that an operating agreement must contain the following, but we don't care that it's in the articles. If these are, as Mr. Kaufman pointed out, intended to be shalls, and the statute is the gap fillers or the default in the operating agreement, silent or doesn't speak to it, what we want here is to specify that the operating agreement shall address the following. But we don't care that it's in the articles.
No, I think the concept is that we want what we see on page 10, paragraph A, and there's some Romanets that we don't have here before us, but you've got dissolution events 1 through 5 already in existence, Romanet 1 through 5 already in existence. We had a 6th dissolution event, and these are all shalls that have to apply to any DAO, and they shall be dissolved in occurrences. The idea is whether this is a complete list or whether we want to ensure that a DAO subject to its own governance would have other conditions upon which it would be dissolved, whether that's through the articles or through a member agreement. Am I correct in interpreting your interest there, Professor Moxley?
Yes, Mr. Chairman, I think so.
I'm sorry, I didn't see you reference it. Go ahead.
Mr. Chairman, I guess I want to make sure I'm understanding the issue. Under existing law, Romanet 3 says that you can dissolve your DAO as provided in a smart contract, bargaining organization, or operating agreement. So haven't we already, doesn't existing law already cover the waterfront of what's possible?
Good point.
Mr. Kutcherman, I guess that's my confusion, is that I was understanding the conversation to be that we already have the catch-all provision, but we don't want it because we only want the solution to occur under the following events.
So, Mr. Chairman, I think that I think we want something like this, and I'm thinking aloud here, if I may. I think something along the lines of allow. Well, so I think start that sentence over. So I think perhaps what we want is to specify a list of things that require dissolution and allow the members or the DAO to create additional criteria for dissolution. But we don't want those additional criteria to be able to undo any of these things listed here. So perhaps a solution might be to do something like add to the beginning of subsection A, notwithstanding anything to the contrary in the articles, the operating agreement or the smart contract, blah, blah, blah. And then we remove 3 because it wouldn't make sense to say notwithstanding and then have something in there. And then in addition, say Roman at 7 or subsection C that says, in addition to the above, the operating agreement articles or smart contract may provide additional means of dissolution so long as they're not in conflict with the above. Something along those lines with better language than that, obviously.
Well, yeah, go ahead.
Notwithstanding
Representative
Mr. Chairman, I think we achieve the same thing with fewer words if on page 10, line 11, after the semicolon, you add the word or. And there's 6 listed ways that this thing can blow up, right? And if any of those 6 things happen, it blows up. It does. And I think the or is actually important because we committed some legislative malpractice a couple of years ago when in the theft statute, we left out the or, which essentially meant that theft was not a crime.
To be clear, right?
Okay, that was a late.
Actually, adding the or is probably a good idea. Go ahead.
It was on.
Mr. Chairman, typically when we've got an or, we often don't have the language that we see at the bottom or on line 3 where any of the following events. Because if there's not an and there, it's going to be interpreted as an or. Yeah. Because we've got any of the following events on line 3. Yeah. And Pro Chairman noted the language that is in statute that we don't have before us, which is the Romanet 3. So 1731-114A Romanet 3. At the time or upon the occurrence of events specified in the underlying smart contracts or as specified in the articles of organization or operating agreement. So that provides already for one of the or clauses to be anything else we decided as being a dissolution event through some authoritative, either the articles or the smart contract. So I think it satisfies that interest that you're looking for.
Well, Mr. Co-Chairman, I think the professor's concern is that you can use Romanet 3 to draft a provision that's in contradiction to the other Romanets. And so just your idea of notwithstanding language, couldn't we just put that in Romanet 3 and specify, or in some way specify that keep 3, but say that it can't be notwithstanding, the rest of it.
So, Mr. Chairman.
Go ahead.
My apologies, Mr. Chairman. So add something to 3, to Romanet 3, that says that anything added under Romanet 3 cannot contradict the other items. I think that should.
You can look at that. I don't know that it's necessary based upon paragraph A that a decentralized autonomous organization organized under this chapter shall be dissolved upon the occurrence of any of the following events. It doesn't let that construct does not appear to let one of the following provisions preempt any of the other. I mean, if it's an if true statement, basically, if any of the following list are true, dissolution occurs. You can't use one of those events to create a false in one of the other truths. I don't think. I wouldn't read it that way. Go ahead.
But Mr. Chairman, and I haven't read the underlying LLC Act in some time, but generally speaking, in corporate law, LLC law, the entire statute is considered to be a set of default rules that can be contracted around, unless it explicitly says that they're not. And many of the statutes in those areas of law will use the word shall, even under the assumption that they're default rules. That's where my concern is.
Just a quick observation. I think, I can't remember who made the suggestion, but I wonder if just in paragraph A at the outset, we just say something along the lines of notwithstanding any smart contract or operating agreement to the contrary, right? It still has to be dissolved if any of these occur. Wouldn't that language preempt then any attempt to circumvent it even through one of the subsections, or maybe I'm missing something?
Mr. Chairman, that was my original thought, but then Romanet 3 was brought to my attention. And it would just be awkward to say, notwithstanding anything in the blah, blah, in these 3 documents, and then one of the lists says anything in these 3 documents. So just a matter of kind of structures is all there.
Okay. Well, let's give that some more thought. I think we understand that point. Does anyone have any more questions on that point?
I was just curious, if Mr. Hopkinson developed the solution and all of that back and forth.
Good question. Mr. Hopkinson, solution? Mr. Chairman, I don't know. We have a specific issues. Okay.
Whether or not it's necessary, but that would take some more work, so.
Thank you. So let's note that. I'm trying to address it. Professor Maher, anything else?
No, Mr. Chairman, that's all.
Professor Wright.
I have 2.5 points. Thank you. So one, if you go to section 1731.111, my version has the updated version. In Romanet 2, one of the issues I had, I guess this is a question, it says, if all members have not contributed digital assets to an organization. And one question I have is, why is there a qualification for digital assets contributed? Because I actually have had the pleasure of representing or helping a Wyoming DAO get organized. And one of their issues is, well, not everybody is sophisticated enough to be able to contribute ETH to this DAO. Some of them want to have a bank account, and will have a bank account, and then they can contribute to the bank account. We can convert it to ETH so that they can be part of this. But under this rule, it automatically changes to per capita if anybody didn't contribute digital assets. And I mean, that's a policy choice you can make, but is that the policy choice you really want to make here, that anybody who doesn't contribute digital assets, default goes to per capita vote? Because that's how this reads.
So Professor, on this one though, you do have the clear preemption ability on paragraph A, where we're trying to set default rules that wouldn't be in the LLC Act. And it says unless otherwise provided for in the Articles of Organization, Smart Contract, or Operating Agreement. So we allow for the clear preemption. It's just a condition under which nobody contemplated this, and all of a sudden you're going into a voting circumstance. How do you handle or manage that situation? So there's a lot of room for change, but again, getting to the default position, what would be a better default that would account for that consideration?
Quite frankly, it sounds like what you, an easy solution would be to say if all members have not contributed properly. Because, in effect, that's what we're talking about. Did you put up something of value to get your membership interest? And narrowing it to digital assets, I mean, again, if that's the choice you would like to make, that's fine. But is that really the choice you're making here, or is that language that is kind of a legacy from something else?
Makes sense. Go ahead, Representative.
Chairman, Professor, all what you're saying, should the property just strike out digital assets? Same.
Yeah, I think that works as well.
Okay. Professor Wright, if you want to weigh in on that.
Thanks. Thank you very much, Mr. Chairman. I think the one question just I would have there, if we generalize it to property, is whether or not digital assets will qualify as property. I think there's just some tricky questions related to how you'd characterize a digital asset. I know that's been defined elsewhere in various different Wyoming statutes, but I just would want to make sure if there was a will to generalize it, that it didn't run afoul of some other definition of property, or kind of run into some of those complex questions that folks have had around characterizing digital assets. And I think that's in part why we narrowed it a bit there, just to avoid them.
I do think that we've got that taken care of in Wyoming statute. I mean, that's one of the things we hang our hat on, is the clarity of property and how digital assets relate to property under the Uniform Commercial Code in Wyoming. So I think we'd be safe with property, honestly, and if we're not, we've got work to do elsewhere. But we've got some further thoughts. Go ahead, Mr. Coffman.
Mr. Chairman, I just want to point, I appreciate the question. I just want to remind folks, because we did have a conversation at one point too about why are we narrowing it to assets at all? Why not services, right? Which commonly comes up in the LLC context. But I just want to remind folks, we were trying to mimic the underlying act, right? Which otherwise provides default rules that if you're a member, right, regardless of what you have contributed, and there's no other specification whatsoever, you're at least need to have a membership vote, right? And so we were trying to capture that, as Mr. Wright just suggested. What we landed on was digital assets, because obviously that's what's contemplated. Totally open to suggestions, but I just wanted to give that context, because if we're going to narrow it to just property, we might need to consider other forms of contribution as well that aren't property.
Do we have assets? Well enough to find? Go ahead. Who is that?
Oh, it was Brendan Maher. Yes, if I may. Yes, if I may, I had a comment regarding that, and I think the problem and challenge is around evaluation, and this particularly comes up with things such as NFTs, et cetera, and the idea that if people are contributing to an organization, how do you know the value of the thing put into the organization? And I think that becomes very important later down the road. And on the question about service, that raises issues in terms of, I believe, securities and are people contributing services for the entity, and that can be problematic. Again, not pegging a dollar or other kind of amount to the thing put into the DAO. That's my comment.
One thing about that consideration, though, is that, I mean, we're looking at, first of all, default rules, and there's no way that we can write a default rule that contemplates all the complexities of existence, which is why we make it very clear that you should write your own details into the articles. But if you haven't, here is a simple rule set that we'll provide. And we're not reflecting on Romanet 1, which basically says if everyone has contributed digital assets, look to the value of those digital assets as your first criteria, your delineator of rights. And then if not all have, then all of the members shall have one membership interest and have one vote. So again, it's a default position that hopefully anyone with a more sophisticated platform is going to come in and provide a more sophisticated solution that reflects upon the needs and interests of their DAO. One concern I guess I'd have, if we're changing digital assets there, we would need to really change digital assets above with the parallel construction. And then that would get to actually what Mr. Maher is talking about complexities of valuation that you wouldn't easily be able to work on. So it might cause complexity where what we really want is the member agreements and the articles to do the right thing. And I don't know if we can do a better job than what we have there. At least that's the way that I'm reading. Go ahead, Representative.
Mr. Chairman, I'm worried we might just be getting too deep into the weeds and just say, let's put asset. Broad enough. I believe that's defined in the Uniform Commercial Codes.
The concern there is now an asset gets to what Mr. Maher is talking about evaluating that asset. So I can say that my service contribution to writing the code was an asset that I contributed. I don't have a valuation for that, so I'm going to go file a lawsuit to get a valuation of that. This clean underlying contract is clean in terms of if you contribute a digital asset, you've got a blockchain demarcation that's going to say 75 X coins went in from me, 74 X coins went in from you, I get 75 votes, you get 74. That's clean. You don't need a lawsuit for that. So it seems to me that whatever we put here as a default position should be relatively lawsuit avoidable, even if it doesn't always make the right determination. And then if you want complexity, hire Senator Nethercutt.
Here.
Mr. Chairman, I appreciate Professor Wright's concern here, but I too like the existing language. I don't think this Romanet 2 is going to be used very often, because if you have negotiated your operating agreement and you've said, hey, I'm contributing $1,000, you're writing the software code, and this is for what? It seems that the Romanet 1 and Romanet 2 are designed for people who they're not going to spend any time negotiating, they're just going to be out writing code and having a smart contract. Then you've got those default rules. So I like the existing language.
Good discussion. And we're pushing up against lunch, so I guess we should probably start moving forward, but it's okay if we touch on this. I don't know what we're going to take time out of. Go ahead.
So
Professor Wright, you've got a couple more ideas here?
Well, I'll limit it because I don't want to cut off anyone's lunch. But I guess this gets to under section 114 and the requirement for this natural person. And my concern is, what about effectively a nested DAO, meaning a DAO that is owned by DAOs? Is there a natural person in that line? And what does control mean in that context? Because it says control of a natural person. And for a DAO that is owned by two DAOs, is there a control natural person? Again, this is more of a question because that seems like an area rife for litigation. Right? In, who is this natural person in control? It could be a DAO that's in control. That means there is no natural person in the first one, second order. So again, a question that
Professor, the concept there is sort of the human in command idea from artificial intelligence where somebody needs to kill switch. And I don't know that this captures that perfectly, but that is the underlying idea. So if you have a DAO in charge of another DAO, and you sort of regress through this logic, and you've got a human in charge of this DAO, which controls this DAO, I think you could make the claim as long as this human can kill this DAO, I think you've certainly satisfied the human in command desire that this is reflecting. And so the question is, are you then satisfying statute, which I think is your interest? And what do others think? Is this language good enough for that? Do we need to strengthen it? Yeah, Professor.
I don't pretend to have the answer. I think Professor's point is valid, but I agree with what you're saying, and that is we definitely contemplated not so much layering DAOs, we definitely contemplated other entities, right, owning a DAO, and I think you expressed it well, and that was at the end of the day, we just wanted to make sure there was a kill switch if there's some automation that's just going on into perpetuity, whether or not the verbiage one natural person is the right language, I don't know, but I 100% agree with your sentiment that I think where we landed on the policy is probably the right call.
Mr. Chairman, perhaps this could be solved by adding the word ultimate before control, or the ultimate control of at least one natural person. Does that sound? I just came up with that now, so thinking aloud, but if that sounds right to.
What do you think of that? Does that work? Yeah, it definitely implies that you're going to phase back a second. All right, I see Professor Wright, and then I see Chris Brown. Professor Wright, thoughts on that?
Yeah, thank you very much, Mr. Chairman. I think Professor Wright's comment is a good one. The language presented by Professor Moxrey I think is interesting. I guess the one question just I would have is whether or not that loosens the ability, to have some form of human control. If it's ultimate, you could just see that getting pretty abstracted away at some point. So I guess it is slightly academic that there may be kind of nested DAOs. I think there's definitely a possibility for that. I don't know if that's ripe yet, but I definitely agree with Professor Wright that that could be ripe in the future. I just think it raises some really complex question about even what ultimate control means. Is that something more like a beneficial owner, or what types of concepts would need to kind of be layered in to really define or add more definition here? I just don't know. I don't know the answer. It's a really great question.
Thank you, Professor Christopher Allen. First time on, welcome. Happy to have you here. Introduce yourself briefly, and then what are your thoughts?
Yes, thank you, Mr. Chairman and distinguished select committee members. My name is Christopher Allen, and I'm the Executive Director of Blockchain Commons, a not-for-profit benefit organization incorporated here in Wyoming, which is founded to support open infrastructure for blockchain and digital identity technologies. I have some larger statements that I would like to make, but I thought that it was particularly relevant in regards to this topic right now, which is that we have begun some work in the identity group and with law around a concept called principal authority. And that under agency law, principal authority is the party that ultimately, back through however many delegations have been allowed, where the buck stops. And I would suggest that you consider some language in regards to that there exists a principal authority who is a natural person who has some specific form of control. Because my other concern is the definition of control in digital assets can be quite complex. I would say, something along the lines of maybe there exists a principal authority that has the control to dissolve or has the control of a majority of the assets, or I don't know, I'm not sure what the right, language is, but I would be also define control. And I'll hold the rest of my comments for a later discussion.
Thank you, Christopher. Appreciate it. Further thoughts on this? I don't know that we're going to come to a quick, Brendan, quickly, go ahead, Maher.
Yes, I concur with Christopher Allen, without doubt. The issue here is that as these things get nested, the ability for one, as they move away from the technology, to even understand how to stop it can become problematic. So, and also being a part of the efforts in the digital identity working group and earlier efforts, I absolutely concur with Christopher Allen's statement about adding in language related to principal authority and proof and verification thereof. I'll hold the rest of my comments for now.
Thank you, Ms. Maher. Appreciate it.
Mr. Chairman.
Go ahead.
Yeah, just to present an alternative option, I'm satisfied. Don't think it's necessary to change it. I think your determination of control still lets indirect control to apply for this statute.
Another comment, I was just inquiring to her whether, while there's not detailed specificity that would necessarily satisfy a technologist, this needs to be interpreted by the Chancery Court through litigation, theoretically, and others. And the question is, would they know what this meant effectively, and would this get the right outcome, or at least go in that direction? And I'm inclined to agree with Representative Yin that I think while we can play with some of the nuance, I think this meets the high level objective and provides a substantial amount of clarity that of course. Other thoughts before we move on? But let's again contemplate that more. We might come up with some ideas over lunch about how we could strengthen that. And so that's two. What's your half point?
Well, my half point, thank you, is should management be delegable? And that's a broader question, because the way this is drafted under 109, you can't delegate management to, it's like hard no, you can't do it. It says management is vested in the members in any applicable smart contracts. It's not clear. I don't know what a court would do with a manager LLC. Because there's no default rule part here. It just says members, the DAO, and the members in the DAO, or the smart contract. Doesn't say you can delegate management to another entity specifically. And when you start talking about nested DAO LLCs, you're going to have delegated management. And again, I raised the issue. You know, I am not here to give answers, but to raise the issue. But if a DAO wanted to delegate management to another group, should they be able to?
Well, to answer the question, we were very authoritative on exactly what you said. That wasn't an accident, certainly, Mr. Coffey.
Thank you, Mr. Chairman. Again, a fantastic point that I just want to refresh everyone's memory. We did talk about that a little bit, and ultimately, I think where we landed last year was, well, I don't know what the right policy call is ultimately as to whether or not the members should be able to delegate management. They could, right? If collectively as a member managed LLC, there's some proposed protocol, change where management of some aspect is delegated to someone, who are we to get in the way of that, right? And understanding that might create problems down the line. I just wanted to, again, remind the group that we did go down that road a little bit. Where we landed was ultimately, that might be too prescriptive. Whether or not that's the right answer, I don't know, but that's where we landed.
Professor Wright, go ahead.
Thank you very much, Mr. Chairman. And I think Professor Wright's point there is a good one as well. But I guess the question I would have is, if it's member managed, then the members either in the articles of organization, the operating agreement, and frankly, also the underlying smart contracts should be able to delegate authority. There's enough flexibility in just kind of how this is structured so that the members would have the ability to do that if they so desired. So I think it's accounted for. Yeah, I think that at least that possibility is accounted for. Or there should be enough flexibility to accommodate that if that's how people wanted to self-organize.
Thank you, Professor. Mr. Dell.
My only comment is, I'm troubled by the use of shall be vested in the members. We're the members in the DAO. So if the members decide, hey, we're manager managed, can a member say, you're violating the statute?
Mr. Kaufman.
No, Mr. Chairman, I need to think about that. I understand the point and I appreciate that. Mr. Chairman, I'm still stuck on as a policy perspective, how far down that rabbit hole we should go. Yeah, I should comment for sure.
Thank you, Mr. Chairman. It says clearly any applicable smart contracts. Why can't you just put them in the management actually gets assigned to another entity?
It's an interesting question that I see. If you have a member managed organization and they delegate to a manager, which is like an abstraction of a manager managed LLC, is it a manager managed LLC or is it a member managed that delegates?
I have a comment on that.
Mr. Maher, go ahead. What's your comment on that?
I think Senator Ruffus, you hit the nail on the head, and therein lies the question, and it is really, is the entity itself becoming and transforming into a manager managed LLC, or are they delegating a portion of their operations to something else? And I think the important thing to keep in mind in all of this is that given the complexity of all of these entities, it is going to be extraordinarily important that they be able to delegate some aspect of their operations to another principal authority and another entity to manage portions of those operations. Now, whether that actually becomes a transformation of the entity itself into a managed LLC is an entirely different question. That's my statement.
Great, thank you, Brendan. This will be another thing we can think about over lunch, I think, and it's gonna be great. Yeah, Senator Cost doesn't have to think about it over lunch. He chooses not to. Any final thoughts, professors, before we do break for lunch? On all right, thank you very much.
You guys so much to think about.
We will continue then at 1:30. We'll come back and continue public testimony on DAOs. I look forward to seeing you all back here probably at 1:30.